Good morning. March 30th, we're going to be streaming stocks, options, futures trading. Sub up, like up, comment down. Happy money sticks around. We're looking at some technical analysis. Looking at some of these runners. It is Thursday. One more day till the end of the month. Let me get set up here. TD Ameritrade said I'm in trouble for day trading. I didn't do any day trading yesterday. But we'll see. Hopefully I can still open up positions. Saying I can't, but I haven't tried yet. So this morning we got some data. Got German CPI came out, and we got GDP numbers. Actually bearish looking, the data, but not too bad. So market's still rallying. Sharing the stream on Twitter. I was tempted to go long last night on futures before I went to bed, but I didn't. I was scared. And sure enough, here we are, up 0.5%. The grind up continues. We broke that 400 level and still going up. So 406 is pretty close now, that gap fill. That'll be my next point of possible reversal, but momentum's up. It's gonna stay up till it's down. Morning rally. Nice. You must have had a lot in it. Got about 10 minutes to open. Let me show you guys the data. So, German CPI, their CPI actually came in higher than expectations. So, month over month for March was 1.1%. Estimates were 0.8. That's the HICP. Not sure what that means. Year over year for March were 7.8%. Estimates were 7.5. So those are higher than estimates. German CPI year over year for March 7.4%. Estimates were 7.3. Month over month for March were 0.8%. Estimates were 0.7. So it was close to expectations, but a little hotter than expectations. And market didn't care. Jobless claims. Oh, GDP numbers, plus 2.6%. Consensus was plus 2.7. So maybe that's bullish. Market's slowing down. US Q4 final GDP plus 2.6. First prelim GDP plus 2.7. Q4 final PCE price index plus 3.7% versus prelim plus 3.7. Final chain weighted price index plus 3.9, prelim plus 3.9. Consumer spending for Q4 was plus 1% versus prelim plus 1.4%. We also got US jobless claims. Plus 7,000 to 198,000 in March. The survey was 195,000. So that's slightly bullish. More people lost their jobs. March 18th week continuing claims. Plus 4,000 to 1.689 million. And your treasury yield rises to session high of 3.5%. Morgan Stanley's Mike Wilson has said the U.S. is in a rolling recession. AMC Networks and Vizio expand partnership. SI's up 3% pre-market. Birds is up a little bit, 2.25. SPY, oh my gosh, up 0.7. Seems up 0.4 last I looked. Geez, another big gap up day. I don't like trading these as much unless it's the kind of the top of the range, because so much of the move is done. It's like I'll get in a position before pre-market or before after hours and then just hold it. But if I'm not already in it, you know, similar to yesterday, it was such a big move. It was all done extended hours that there wasn't a whole lot of the range here. I mean, yeah, this was a big move, but just you're going long basically at the high, which sucks. And now we're doing that again. It's up almost 1%. The monthly mortgage outpaces rent more than it has since before the financial crisis. 9 killed in crash of 2 U.S. military helicopters in Kentucky. I don't know if you guys saw 2 Blackhawks went down, actually. It's kind of sad. New high on the day there for SPY. South African Reserve Bank raises repo rate by 50 basis points to 7.75%. Whoa, yeah, BY just flushed. I suppose news came out. I don't see anything. There's a huge candle down. 4 minutes to open. If I can find the news or something that came out. Going the wrong way. I don't see any filings. Oh, here it is. Files for stock offering of 300 million common stock. Is this from the preferred shares? Or the warrants? Or just straight up stock offering? Not sure. Let's see. I don't see any releases on their website. Oh, there it is. Here it is. So announced that it filed a prospectus supplement with the U.S. Securities and Exchange Commission, under which it may offer and sell up to 300 million of shares of its common stock from time to time through an at-the-market offering program, with a maximum aggregate offering amount of up to 300 million. The timing and amount of any sales will be determined by a variety of factors considered by the company. Yeah, so it doesn't. So that's separate from their preferred shares and warrants. Common stock will be offered through BBBY Securities, which is serving as the sales agent. They sell common stock by any lawful method and market. That's interesting. They would release this pre-market. Kind of crazy. Yeah, I think this is separate from. I don't think this has to do with their preferred shares or their warrants or anything. So they're looking to raise up to 300 million for it, right? It's not offering 300 million shares, but raising up to 300 million. Seems pretty straightforward. I guess why are they announcing it now is not great seeming. Pre-market's kind of strange, and if they think it's going to rally or think it's going to not stay at this price, why would they put that filing out right now? Because I think once they submit that, they can basically do it any moment. That's what it's showing. Alright, market's open. But why wouldn't they wait until it was at a better price? That's what I'm wondering about. Well, there it is. BY's down 6%, 75 cents. It's hitting right at that level. That is the low. Hit a little lower that on the news. Yeah. I'm not sure how to think about that. I mean, it seems like they could have done it all at a higher price much quicker and not had to do it now, unless they were actually thinking about offering the shares now. I don't know. What do you guys think? But I don't see anything good. I mean, yeah, trapping shorts. Of course, you can think about stuff like that, but really though, the whole overnight looks like intraday. Yeah, EVTL, it's risky, but it is on kind of a upward trend. OXD with a gap up 35%. The red candle. OS is up. Yeah, I'm gonna have to think about that. That's plus side, there's more to it than I'm not reading. Here's more of a in-depth thing. This looks like it's more in-depth. To do it pre-market like that? Seems a little strange. BRS. It's B. Riley, okay. I'm not reading it out loud. It's pretty much the same thing. I'm just seeing if it's any different. BRS is going to make 3% on the sale. Mentioning strong retail. I'll read this down here. It's just talking about its volatile price action from January 3 to March. The market price of our common stock has had extreme fluctuations ranging from intraday low of 77 cents to an intraday high of $30 the last, I guess, from March 2022 to March 2023. Last reported sale price was 79 cents. From January 3 to March 27, the daily trading volume of our common stock ranged from as low as approximately 2 million to as high as approximately 395 million. These extreme fluctuations in the market price of and trading volumes in our common stock have been accompanied by reports of strong retail investor interest, including on social media and online forums. While the market price of our common stock may respond to developments regarding our liquidity, operating performance and prospects, developments regarding COVID-19, and developments regarding our industry, we believe that recent volatility and our current market prices reflect market and trading dynamics unrelated to underlying business or macro or industry fundamentals. And we do not know if or how long these dynamics will last. In addition, as a result of the anticipated new sale of our common stock into the market pursuant to the sale agreements or otherwise, including under a committed equity facility discussed below, current common stockholders may experience significant dilution and the value of their shares may decrease. So yeah, significant dilution, especially if they start offering them here at 76 cents, that would not be good. That'd be a ton of shares. Morning Tree, morning Tasty. Executive Golden Parachute. Offering shares for the company, I don't think it's anything to do with Golden Parachute. I think that'd be illegal. The sales agreement only provides for sales made pursuant to an effective registration statement. On Form S3, on filing our annual report on Form 10K, which is due by April 26th. So 10K is due by April 26th. Upon filing our annual report on Form 10K, which is due by April 26th, we will lose S3 eligibility and therefore expect all sales made pursuant to the sale agreements will cease by April 26th. Do not receive the proceeds from offerings of securities covered by this prospective settlement. We will expect that we will likely file for bankruptcy protection, in which case holders of our common stock will likely receive no recovery at all for the securities offered by this registration settlement statement. So it looks like, yeah, I mean, that's not good sounding. Are they saying they're going to offer the shares before April 26th? That's what I don't quite understand. If we do not receive the proceeds from the offering of securities covered by this prospectus settlement, we expect that we will likely file for bankruptcy protection if we do not receive the proceeds. So if this share offering doesn't work out, they say they're going to file for bankruptcy. But I'm not sure on these dates upon filing our annual report. So their annual report of 10K is due on April 26th. So they're going to have earnings before then, or by that date. Upon filing it, we will lose S3 eligibility, and therefore we expect all sales made pursuant to the sale agreements will cease if we do not receive the proceeds from the offering.
Of myself.
Good job, buddy. I understand that right? Anything illegal these days? Everything's illegal. They just don't enforce anything. So there's no dilution this whole time for the last 2 months? No, they haven't diluted the stock. Now BBBY is green on the day. Their debt restructuring, they've used warrants and preferred shares. And I don't think any of those have converted to common shares yet.
Look at my bottom lip. It's really funny.
They're out of time. Try to turn on the. Is that how you're reading that? I'll share this with you guys on Discord. If I can. Oh, it's already on there. I'm not sure. The dating on the bottom, like, am I reading that right? HLBZ is up 5%, EVTL up 5%. BBBY is fully bounced since that news so far. Mullen is up 15%. Sen is up 8.3. Chart doesn't look too bad. This one, people said it front runs GME. Carvana's up 6. HLBZ is up 6. HLBZ is rallying 7%. EVTOL's up 5%. Birds is up 8. No, Birds is down 3. keep BBY on here. I'm kind of interested. That news seems very strange. They haven't diluted yet with their preferred and their warrants. Why would they offer 300 million offering? Epoxy's up 30. Now, why are you still holding, Don? Because you think they'll be able to offer the shares and not file for BK? I mean, they're saying if basically they can't make the offering, which I don't know why they wouldn't be able to. They probably did, Joshua. I don't know. But maybe they already offered those shares. I'm not sure. Yeah, I'm kind of interested. That's very interesting. I wasn't expecting this, so maybe not sure I understand it fully, or just coming to realization of it. I guess figure that out. I thought the billion in equity raising was going to be enough, and I thought we'd see the conversion of those warrants or the preferred shares dilution happening long before they'd be wanting to offer more shares. So I'm kind of thrown off a little bit. GME is basically flat. Carvana's up 7. HLBZ up 6. EVTL up 5. Done a nice trend. Should have gotten more shares. None of my birds contracts are filling. I need some real price action on that thing. Not showing you're live, it shows up other channels. Live. Yeah, you gotta hit the notification bell if you haven't already. That'll at least notify you. I know that's what's throwing me off, Don. Like I don't. It doesn't make a whole lot of sense. It doesn't mean they're offering shares now, but why file it now if they weren't considering it or wanting the option to? Also looks like the stock. BY came out with this, they said they're going to offer shares up to 300 million worth. The German inflation, though, I think came in higher than expectations. Right? We went over that this morning. Yeah, I was just looking at estimates. It did come down. Estimates were even lower, though. Just a little bit. Morning, Mahmoud. The Bobby? I don't know. I don't know Linda's voice. Pulling it again. Hopefully it's not being bullied from the inside. There's a cash crunch. File an improvement case and need the cash quickly. Yeah, but that would be awful to dilute down here. Bob's Burgers. Nope, still nothing. Page 17. I guess I didn't read the whole thing. Yeah, that's kind of common. First owner's purchase. Well, they say if they don't get a reverse split, they'll probably have to file for bankruptcy also. Dude, this filing is awful looking. This is so negative. What the heck? Just reading like the bold points on each paragraph. It's like that just doesn't look good. I don't know. As usual has a drop. Today grab more shares. BY back down 5%. I don't know what to do with that. A drop, I mean, maybe a little bit. Maybe this is the drop. They already have enough votes? They don't have any votes. They don't even have a date for us to vote on it. Alright, thanks, Tasty. I mean, just looking at the chart, these are the levels I didn't want it to break to the downside. It's wick down there, but basically we had consolidation. Breaking to the upside's good. Breaking downside, bad. And it's coming back down here. Dang, man. I don't know how I can see that as good, I guess. Like, it seems like that negates all of the other offerings with preferred shares and warrants, like, makes all of that. All speculation on what's going on with that. I don't know. I'm trying to read and do a little research here, guys. Sorry. They're talking about it canceling preferred stock warrants. Hmm. The benefit fall to 72 cents. The warrant holders can load up shares. If you're lending money to B, you want to capitalize on stock runs. Yeah, I know, it doesn't even make sense with their market cap. And I'd have to ever lose. I like this bet trade. Quit looking at the inflow on Weeble's pie chart, man. Trying to get to the bottom. It's, I mean, that's actually a long filing. It's not. I didn't really realize. It's a lot. I guess everything else in it isn't it. Well, there might be new stuff in here. I just broke out, new high there on the day. Our authorized share capital consists of 900 million shares of our common stock. We had 428 million shares outstanding. Why isn't this updated? This says 116 million. Is this not showing what's in the treasury or something? This was predicted on his show last night? They predicted a stock offering? Are you serious? Why? Yeah, BY came out and said they're gonna offer up to 300 million worth of shares, just up with the common stock. Well, you have a timestamp for where it was predicted on PB show? I want to watch it. ARQQ. Chart looks nice. It's bullish. Box D 45%. Oh, okay. The price dip. Oh, yeah. They just expected it to dip to what, 73 cents or whatever for them to close, you're saying? Hey, Tainted. Thanks for your likes, guys. Sorry, I'm trying to figure out what's going on here. There was an offering filed this morning with Bed Bath & Beyond for, what did they say, 300 million? Yeah, 300 million worth. So, trying to kind of do a little research here, figure out exactly what's going on. But thanks for your likes, guys. 27 of them, appreciate it. It doesn't say 400 million shares, it says 300 million notational. So if BBY was trading at 300 million, it'd be one share they'd offer. But at the current price, yeah, it's not good. That's a lot of shares. Eyes flushing down here. Got an engulfing candle, not sure. Every other penny stock doing cash grab. But that basically, it's not though, because everything they've done up until now has been very unusual. Notional, not notational, notional. All right, J-Pong. Non-expiring options. Yeah, for me, I'm just in too heavy just to be able to grind it down for however long it takes. And yeah, I guess too heavy for the amount of risk that is involved if there's nothing else going on other than what it seems now with this filing. Yep, this was what the low I didn't want to break. I'm closing. Got catch on the momentum back up, maybe. There might be squeezes on it and stuff. You know, like we've seen here, it could still cyclically be doing this. For me, I'll probably just have it on a watch list and grab it when it starts going. Just catch momentum on it. If it doesn't have anything happening before or around earnings, which is this next month, then I guess probably June is when the dates line up for another move on it. Ah, we suck again. Okay. So even if there was no filing, I might have been able to stomach this more, but probably shouldn't have. So the fact that it came out with a filing of offering more shares is maybe an advantage for me, because it gives fundamental reason to sell along with this TA of it breaking this low. So I did close out, and yeah, I wait. Yeah, I closed it. I was over positioned in it. Anyways, if I had a smaller position that it's willing to hold, I would have, but I had a big position. I closed it out for a loss, and I waited a long time, and came down. It got to a price I thought was turning around it, added, and then it came down. I thought it was another bottom. I added again, so yeah, kind of kept adding. So it just got larger than I cared to. Box to E is up 40. That SI bit with me. SPY's dumping down here. SI's down 8%. I think they owe me a dono. This is kind of level I wanted SI to hold, so we'll see if that happens. Yeah, no, I know you can't force people to exercise warrants. We'll see. I mean, it just sucks I didn't make the right move 3 weeks ago. But yeah. Quintuple the money. Yeah, no, I'm fine to sit on cash. I need to sit on my hands for a bit. That was heavy. Heavy. Thankfully it wasn't like down 100% or not 100, but 90% with that news. It was just a 5 or 6% drop. Yeah, I mean, EVTL does look good. Does look nice. Did break that level there I had, 2050. Get some lines up here. That might not be much. Here, 2.5. Makes sense. What else are we looking at? We're looking at birds. Birds is down 6. Looks like it's already finding support though. Got a little gap to fill there. Still just from that rejection on 30 cents. I have to look at my title to figure out everything we're watching. I'd like these birds contracts to fill. Why won't it fill me? Really needed thanks Tree, appreciate it, man. Thanks for sticking to your word too. Next time, Jay. Next time. Tree and Jay had a bet. The loser had to donate to me. Bet away, bet away. Yeah, BBBY definitely can recover. I didn't want to see it break that low. That's basically it. Just looking at TA very simply. It's been consolidating, which was great because we've just been dropping. Get nuts. So great consolidation. After consolidation, that's when you decide which way it's going to go based on which level breaks, the high side or low side. It broke the low side, so it's going lower. Maybe this is the final dip for the rip. I don't know, but yeah. Broke to the downside. I still think it could rally back up to $1 like pretty quickly. But the fundamental news that came out this morning too, I don't see anything about that. Even with the, I don't know. Maybe I don't understand it enough, but maybe just keeping it simple and stupid is the way to do it, because that's usually the right way. Not overthinking it, not trying to find some confirmation bias in it. I am curious to see what people come up with though, because it does seem a little strange still. Yeah, BBBY had a share offering for 300 million worth notional this morning. So no, the outstanding shares has never updated, which is another strange thing. It still says 116 million outstanding. So I don't know. I don't know what's going on. Morning, Ben. Credit agreement reduced from 565 million to 300 million. Terminate the Hudson Bay deal. I was reading something about how they got rid of, they closed the warrants and all that, but I'm not seeing that in the filing here. Ace Ventura, oh my gosh, dude. Holy crap. Thank you, Ace. Appreciate it, man. I don't this is the biggest dono in a while. Ace Ventura, everyone. That's Papa Ace. He's the reason you all have memberships. Thank you, sir. This is about how I feel today.
Let's get nuts!
Maybe you too, Ace. Let's get nuts. Hopefully you're having a better day than yesterday, man. Yeah. Ace is the GOAT, 100%. I can't even tag him in here. You're not even in here. Thanks, Ace. That's weird. Just lurking. Dono lurker. Thank you. He's for Presidente. Oh, Presidente. You're adding Emperor? Yeah, I mean, I don't know. You okay, Julian? No problem. Seriously, yeah, I think he just no words, just straight gangster move there. He's probably getting patted down at border security, border patrol. You know what they say about the final dip before the rip. Maybe you'll see that, I don't know. Fetcher. Did they have to actually close the deal with Hudson? I don't know. SI with a nice bounce. Right on the bottom of that bull flag. I don't know where J-Pong is saying he's going to bounce, but this is where I was hoping it would. I said I might want to add here. My one bankrupt stock looks like he's going bankrupt. Let's jump into this one that's going bankrupt. Alright, I did add to Silvergate actually. Said I would do it, I was planning on doing it. I did it. It's the Theta farm, I mean the IV is still awesome on here. I'm looking for a green day to start selling some more calls. And CMI. Yeah, 27%. There you go. Yeah, that chart looks pretty nice. This is what I was hoping to see on BBY. Moving down, moving down, moving down, then it's flat, and then break to the upside. Instead, it did this. Move down, move down, move down, flat. Now it's breaking to the downside. So maybe I'll get this next. Dilution, though, that just doesn't make sense to me. Yeah. For 33 minutes. If they were just predicting the price dropping, then I don't really care to see that. If they had some reason why they were going to dilute 300 million worth or at all, that I would be interested in. Chapter 11. Really? Nice. Yeah, maybe once BY actually goes to file for bankruptcy, I'll jump back on it. At least your average is low. I don't see why you wouldn't see a bounce up above there in the next couple months at least. $42 million, that's a ton of volume. This could be kind of the spring test. I got stopped out on my futures. Nirvana, 11%. I average up on SI. Don't like that cost basis as much. Yeah, Jan, they offered 300 million notional value of shares this morning. I mean, they put a file out, so they can do it whenever they want. Which doesn't make a whole lot of sense to me. Because even if they were planning on offering shares, which I would be totally fine with at a squeeze, you know, if it's $10, $12, $15 or something, they can put that filing out, from my understanding, right then and do it. They don't have to like do it now in anticipation of that. So it doesn't seem like they're waiting for that or doing it for that case. Birds down 10. Yes, that is bearish. But also just looking at the stock, like it broke through the low, it's been consolidating, broke through that low, so I didn't want to see that either. Poor group in shambles. The Hudson deal gone. Is that in the filing? Where in the filing is that? Because to me that almost seems like a good thing if they got rid of Hudson and they just change it all over to a 300 million share offering. SPY moving up here. Maybe that was the dip buy. Probably, yeah. Broke that 400 level. Yeah, I was looking at Sen. How low can you go? Jody got low, 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 low. We don't know where BY is going. APLM, oh boy. I closed out of my BBY yawn. This isn't a nice day to close it since it's down so much. You know, you could have a bounce intraday or tomorrow, of course. But the share offering ended up breaking the support. But I can't answer that question for anybody because we have different financial situations, different plans, different goals, different risk tolerances, different position sizing. I mean, it's way too many variables. BY is holding that support nice still. AI is up 5%. SI, kind of rejecting that VWAP. I did add to my SI shares actually. Oh yeah, and yesterday and after hours I added to HKD. Or I bought HKD, I guess I didn't have any. Not a whole lot of reason. I mean, I guess just the chart, what happened yesterday. It is an engulfing candle. Not sure if TA really matters in this thing, but volume engulfing candle, I'm thinking it could be about to get spiky. I was hoping for a gap up this morning, but not the case. EVTL coming down here a little bit. Trying to think where I sold my bird shares at. It was somewhere around here where it's at right now, honestly. Just the options you can't really play on here. But I don't know how long this rally's gonna go. German economy minister on inflation drop is big, but won't speak of a reverse trend yet. Justin Trudeau's plan to add billions of dollars in new annual spending has some economists worried that Canada is at risk of racking up unsustainable debt. Only about half of the Pentagon's fleet of F-35 jets are considered mission capable, well below the target of 65%. Probably should have bought the dip on SPY there, but oh, you're still getting a little bounce on Mullen. That ain't bad. Probably turned your VWAP off on Weeble. Tree. Tomas. Yeah, this share offering filing. Unless there's another one. And bro, you're really going through it. What? A special dividend? BHC? 80% of the profit to shareholders from litigation? That's crazy. Do they have a patent or something that Apple's using? That's pretty bold. Oh. Okay, I got some calls on that. Kind of sniped the options chain a little bit. There's still a option that I hadn't picked up. I got the May $4 calls, these right here. All the other strikes kind of have already gotten a premium on them. This could go way out the money. I noticed these Mays hadn't really increased yet. Interesting news. Huh. EVTL still up 4%. Oh, I kind of double topping there. Yeah, I just got options on the VHC. Yeah, maybe shares if it drops down or something before, I don't know. Jeez. That's a big drop on BBBY. Oh, that's all-time lows on it. Market cap 77 million. So this is below the level that was predicted by the PP show guys, I'm assuming. But they also didn't predict a 300 million share offering. Which, no one was considering. I was considering it once it rallied, once it was turned around, sure, raise capital. Three years later, what a mess. What a beauty stock. Just a patent company. No Ice Cube, today was not a good day. Sorry, I'm kind of behind, guys. 65 cents. Probably start, since there's no supports down here. I mean, you just have to look for where buyers start picking it up. You're gonna get a lot of volume today if you're looking for volume. Yeah, you've already outpaced the last. You're on par to do a ton of volume today. But yeah, probably psychological levels. You know, 70 cents, 65 cents. That literally bounced right on 65 cents. Looking for 60 cents, you know. Yeah, doubling down. I mean, you can always wait for the momentum to turn around. Like I said, I might still trade this. Because bankrupt stocks often have squeezes. So do reverse splits. So it might be squeezy before then. It's just how low does it go before then? So I'm fine to not catch the bottom and catch on the way up. But buying in it today seems most likely premature. When the news just hit, I mean, people will still be getting this news next day or two that are investors that will decide what to do. Not like everyone's watching the market all the time. We're gonna feed BBY. The FMS. 18%. Chart looks nice. You have a divergence from back here also. All of Reddit works for BBY. Thanks for your likes, guys. If you haven't heard, there was a BBY announced a share offering just before market open today for 300 million. Not sure why, or I mean, I guess they probably need the money. 34 likes, appreciate it, guys. So as far as the warrants and all the preferred shares, I guess I was kind of considering that was going to be enough. They haven't said when they're gonna offer the shares, but they basically had a filing, so now they can do it at any time. So I would have liked to have seen that after BY was up in like the double digits, you know, which I would have been fine with. But being down here, them preempting that seems sketchy. So I did close. Might still trade it, but we'll be waiting for the momentum. Ollie, we've traded this one before. Oh, 51%. $5 price target. See, here you go. Here's a reverse split. It dropped, but then it had a spike a few days later. Honestly, around the reverse split. Oh wait, I can vote on that? I can vote on it because I had my shares before when they did the record date, I think. So once they announce that, we might see a big move up on BBBY, or potentially during or after. Let's see. Yeah, here's a reverse split right here. Did drop, but then rallied back up. And I don't know if this was part of because they reverse split also, but here's another big rally. EVTL holding up pretty well. SI still holding that support. Want to see it hold there. Another bounce is fine, but don't want it to drop below that. Did add to my SI shares. HLBZ is up 3%. So that had good earnings. Birds is down 6.5%. But bouncing here. BBBY down 16%. Hanging out the lows. 65 cents is your first support. Again, something like this takes time, though. It's not like it's just going to rebound right away. It'd be highly unusual. So won't necessarily keep dropping this with this much, but could still see more downs before ups. Now it's consolidating at the lows, probably before it's going to keep going down. Would be my guess. Fox D coming down a bit. Whoa, big flush on BHC. Hopefully that's, yeah, I guess if they've been in that. We paid on or about April 17th. Shareholders of record at April 10th, so yeah, maybe I'll get shares before the 10th. 80% of the profits to shareholders is insane. I guess if it is just a patent company, like you say, that kind of makes sense. So they're offering a share and they're offering 80% of the proceeds. Are they going to offer that via dividend, I guess? Thanks, Ace. I'm saying out of curiosity. Alright, man. Appreciate your donut, buddy. Hope we made it across the border safely. It's gonna be a fun ride. Yeah. I don't know if you're hearing what I was saying, but I think you still see some good volatility upside around the split, at least, and then if it's still around for this cycle in June, you have that catalyst, then you have catalyst of earnings. Yeah, fun ride for sure. Oh, okay, word. Yeah, I think that'd be the only way they could really do it, right? Just offered a dividend. EVTL kind of climbing up here a bit. I don't know if it's June. Let's see. In Bay we have white sand. Just looking at the chart and kind of how it cyclically has rips. So this was 20 bars. This was roughly 20 bars. These are weekly candles, by the way. So 20 bars, March, April, May, June. Yeah, so if we're doing another rip in 20 bars, that's June. Urbana holding up at the highs. Birds down 9%. Candles are kind of ugly, but momentum is definitely still up. Good for drugs. post sets everywhere. That is crazy. Don't get 300 million by selling stock by waiting for it to reach 80 cents. They adjusted a contract. What do you mean, Weeby? Because did they close their deal with Hudson Bay? Yeah, BBBY broke the downside support with that offering news this morning. We just need the company to last that long. Yeah, pretty much. Right side of IV. Yeah, mine had actually gone up. But that's because the spread and stuff. So they did terminate all the warrants and all that other stuff that they did. Well, that's good. And now they're just straight equity offering for 300 million. At least it's not both. The fact that that didn't work out and they had to cancel it or terminate it. I mean, Hudson Bay, everyone was so worried about Hudson Bay because they thought they were the ones that were taking bankrupt, so if it wasn't good enough for Hudson Bay, I don't know. But that also takes out all of the hype about the two other secret investors, from my understanding. I mean, you can't say when it says to, you can't say when it makes sense to sell. You don't know. I mean, for you maybe it doesn't, but you are you, I am me, and other people are other people. We all have different situations, different scenarios. So, baby got SIDS. And NDM looks kind of nice. Little inverted head and shoulders there on the hourly. Oh, that's a huge red candle. Yeah, my contracts, well, they've probably lost value. There's no liquidity on them. Holy smokes, though, that's freaking wild. Surprised this thing hasn't halted. Can't have too many wins. This volume. Might pick up some shares though if it keeps coming down. Yeah, they might have some announcement. I don't know what it would be, but they announced something this morning. But yeah, maybe some other announcement. I mean, all the stuff around even that offering they had before with the warrants and the preferred shares and how it was all strange, to me was kind of bullish. Let me kind of reel into the hype a little bit. So if that's terminated, and even if it's not, it's not good. But if it is, it's also kind of not good. But I think it can still move on a reverse split or whatever. Like in that filing, they say that reverse split has to go through, or they will be also filing for bankruptcy. So basically, if the votes aren't in favor, they're not going to make it. They're saying the whole filing's crazy. This one, even just like the headlines, all the stuff in bold. After all that, risk related. I mean, they have liabilities. They're going to say, you know, worst case scenarios, but it's more than that. I don't know. They're basically saying don't own our stock. So here's a bit about reverse split. If we receive shareholder approval to effectuate a reverse stock split, investors may experience dilution and a decline in market price of the shares through the issuance of shares. But if we are unable to receive shareholder approval relating thereto, we expect that we will likely file for bankruptcy protection. But bankruptcy could be bullish. I mean, other stocks that are filing for bankruptcy are bullish. Causes them to rip. I made money on Hertz. They did their thing. You meet back to this level again, see if it bounces more. EVTL still on the grind up. Birds found some support. SI back at that low. Like to see it bounce here. Whew. Yeah, outside like a clothesline suffocating. Thanks for the likes, guys. I appreciate it. Not the best news from what I'm seeing on BBY, unfortunately. But I appreciate you guys' support regardless. We got 38 likes. SI 1650 is the low on there. Hudson Bay could have been bad. Yeah, if this filing is saying that they canceled or they terminated the warrants and preferred shares, you know, that, to me, that's somewhat good. But then you lose all the speculation on who the warrant holders were and the idea of a merger or takeover by a good actor. Call an ambulance, but not for us, like last time. GME kind of bouncing on that. Yeah, nice. Nice little support. Birds moving back up, going down like 1% now, so showing nice support. Tempted to get back into shares on this thing. Whoa, now it's up 2%. Pretty big candle there. Wish the options will work if this thing gets up to like $1 or more. Just got a long ways to go. 2.5%. Bird's getting pretty volatile with some volume. X Holdings lost at the CAFC, affirming that inter-parties review proceedings that they will very likely terminate the case. What the heck? Who tweeted that? I love the stock market. Double-edged sword, reverse split will happen. Yeah, probably. If it doesn't, they say they're gonna file for bankruptcy. So, yeah, might get a rip before that with a QSIP change, during or after. But if that's all it is, then you're just kind of chasing it and day trading, scalping. It's just gonna come back down after, which is not what I was hoping for in the play. So many tomorrows. BNH. Brook. Ooh. Lucky, lucky, lucky. I like the volume supporting it also. Possible that Hudson's still in? Yeah, I don't. This filing, I'm not sure if it says they terminated it or not. I don't know yet. It could be saying that. If they terminate it, then presumably Hudson Bay would be out. And I'm assuming also that they've made their money. You know, they made their whatever percentage diluting it up until now, which I didn't think so before, but I don't know. The shares outstanding hasn't changed. How possible that 2 senior investors are? I don't know if it's terminated or not. I'll have to find that spot in the filing. I don't have ASTS. It's starting to rally again. Look at all those green dots. Ooh. I don't really like that chart yet. If it's stopping here, it's kind of a head and shoulders. I was predicted like this in BYs before the run up in January. Yeah, let's look at that, because I think that lasted for a few weeks. Oh, this dip. That's true. This one didn't last very long. This was on bankruptcy news. And then it ripped from earnings. So there was some catalyst there, I would say. But that's a good point. HST is overweight. Yeah, we'll see. I mean, if this repeats here, you're looking at yeah, like pretty much close to 0. I don't think this will repeat. I think it will still come down some, but this can't happen. But maybe the upside can happen. Was there news on this January? I can't remember, other than earnings. I remember the drop was that BBY was talking about filing bankruptcy. Earnings probably were crappy, but yeah, I guess it doesn't really matter. So bear flag on BBY here, but it is already down 15%, so GME kind of retesting and bouncing again. All this bouncing on this level makes me want to get more calls. More. Calls from yesterday didn't fill. Alright, see if I can get some more calls there. Yeah, I mean, volatility and upside is probably going to come on BBY. I guess for me and my capital allocation, it was not looking at a trend that's going to continue. The whole trend was going to reverse because they're not going to go bankrupt, and they have some potential for investors, and they've got their debt taken care of. So now that they are offering 300 million shares, or 300 million worth of shares, or filing for that when they're at 80 cents, you know, all-time lows, it's not adding up for me. So as a trade, it's definitely still possible. I mean, like I said, bankrupt's dope. But a major turnaround, it's seeming less of a secure investment, I guess. Yeah, I closed at Access. I closed this morning on that filing. We actually had to bounce back to break even, but I didn't get that great of an exit. I had a lot to close. Bought now and wait a while. If it goes bankrupt, no. But yeah, if you have a move up before then, it's just how far down does it go before it moves up? You know, if it comes down all the way down here, 27 cents or 25 cents, and then has a huge move, say 100%, 100% for 25 cents is 50 cents. So it might have a huge move, but where's the bottom? So that's where kind of just TA traders work. You don't have to even look at filings or fundamentals necessarily, just follow the TA. And yeah, TA wise, this thing broke the support after consolidation, so more downs, I think, are coming. But sometimes there's exceptions. You know, here did actual V, which is pretty unusual. How much money did GME have on hand? I mean, the last in the 10K? Oh, there's a big bounce in GME. Dude, it's respecting this support really well. None of these got filled. Like, I have the timing almost perfect, but trying to be too greedy. Too greedy with my fills. That'll get filled. But wait. Old SI, old. SPY is just flat today. Holding above VWAP, holding this 6.60% up, but so flat. GME up 1.25 now. Such a big bounce in that level with volume. I think the stock is still fixed, but still trade it. I think one of these days we're going to get a pretty big move back up. Break this 24 level. Probably retest this 27, 28. Freaking hate options on GME though. Even with the low IV, they still suck. That's kind of a bouncy move on GME. With volume. They make me... This was the ask. Why does the ask keep going up? Canceling it? Let's see where it goes. I'm going to go at the ask. You have to play games with the market maker. Cancel. Okay, yeah, I just filled. GME's getting poppy here. APLN. Unhalted. GME's up 1.5. We'll see, maybe this is the day. They've been running it on Thursdays and Fridays, which is very unusual, but I think as of late, that's been a more common time for them to rally GME. EVTL's looking good, about to break out 7%. Fishing should be moving to GME. I don't think so. Holding up better than BBBY. SPY's coming down here. Oh, BY's maybe getting a little bounce. VWAP's all the way up to 73 cents, so maybe it'll move back up there. Looks like it maybe is trying to. The bounce on that support level on GME is beautiful. SI, bounce yet. Carvana new high up 13%. EVTL hasn't broken that yet. Birds is almost back to break even. Bay's up 5%. That chart actually looks pretty nice. GME consolidating the high after this bounce. Buy back down to VWAP is quite high. See what the Redditors are saying. The bad actor got rug pulled. This is showing kind of the bullish side of terminating the warrants, which to me that is kind of a bullish thing. But you really don't want dilution at these prices for BBY. Conclusion, HBC was using their warrants as a hedge to lock in profits via short selling of shares in the open market. That was always the concern with that warrant deal, is they were making money just shorting it. Example, I have a warrant that I can execute at $1 to receive one common stock. Say the common stock right now is $1.50. If I open a naked short position, sell a share for 1.5, I lock in a 50-cent profit per share. No matter if the stock goes up to 1 million or down to 0, I lock in a positive 50% return on a $300 million of capital I just lent. Stock goes up, they use a $1 to buy a warrant, cover the naked short, and keep the 50 cents. Stock goes to 0, they never close the short, they lose the $1 warrant, but keep the 1.5 from the short. Still profit 50%. You won't need to pay any borrow fee because you don't need to borrow. You have a locate and a warrant. Just open naked short, get a free short position, doesn't cost a thing. Let's look at the volume. It's been massive, millions of FTDs, reg show over 55 days. The warrant deal was a massive and gave HBC 3 times the float of shares mess around with and locates through warrants. Say they did go the route posted above over the last few weeks. The day we ran to $7 until the day we dropped under $1, they could have been dumping a massive 300 million naked shorts into the market. Now what happens if someone rug pulls your 300 million locates? You are caught with your pants around your ankles, balls deep in a half bear, half bull hybrid that is about to mail your simp. I guess, yeah, did BBBY have the right to just terminate it on him? Densu says, oh, by the way, I have a vote for reverse split coming up that if passed will lock in your negative 700 to 450 million or more of losses on your balance sheet for eternity and destroy it to receive forever. Is forcing them to cover everything. This is the most amazing thing that could have happened. Now we have new financing, a massive bear trap, bad actor caught in an act. Okay. Yeah. We'll see. I'll just trade the TA on it. Given that it could gap up 100% after hours, which is always a possibility, so I have to be willing to just catch it late. But I'm trying to think what would, at this point, what would cause a gap up. I guess shorts closing. They do that after hours, I suppose. Stop comment. I'm not even sure how many shares there are outstanding at this point. Holding out of sheer confusion. Not chilling, just actually confused. Yep, that's me, but I don't have the risk tolerance for it. I did the opposite. I sold out of sheer confusion. GME moving up a little bit here. I'll share this on our Discord if you guys want to read it. I also shared the filing that BBBY put out this morning. Yeah, Turcos is kind of interesting. Down 10%, but big rally yesterday. GNS doing, yeah, GNS broke that floor. Hey, so you still holding GNS or did you close that? Broke the floor. Had that good news, but there, QQ. Nice, yeah, up 8%. Looking good. SI, nice little bounce here. This is what I was hoping for. We'll double bottom at this bottomless bull flag. Really, yeah, I don't want to see a flush below that. I bought $1 college rate, but I don't know what to do. Force them to cover everything. Yeah, I closed my BBY position. Cash cleared puts, calls, shares. I'll trade it and catch momentum maybe. But yeah, the lack of, I guess, transparency on what's going on. Or maybe it's pretty transparent, but the first kind of equity offering with the warrants and all that was so complex. That to me was more sketchy. But then seeing how it could be a reason for it, that made me more bullish, and the fact that it's pushing off bankruptcy. Now that they've terminated that, like, I see that as a good thing, terminating that, but it also could be a very bad thing. Because basically, if they did terminate, I'm not even sure yet, so I'm not even gonna talk about it. A share offering at this price, whether they terminate that or not, seems like they shouldn't have needed to do that. So I think maybe I don't understand enough about it to hold the position I held, basically. I don't know where Ace is, dude. Just came in and just dropped the 50 dono and peaced out. X 89 cents. ARQQ looking for a group? Like a group of investors? Jay, are you leaving? Because it's about to break the level you were talking about. Shaking out the border, yeah, maybe. More buying BBBY. Yeah, GME looks good. I like that bouncing in on the bull flag. I added to my calls there. Oh, I didn't put that in Discord. I picked up some 30 strikes. Jerome Powell asked in a private meeting how much further the central bank will raise interest rates this year. Pointed to policymakers' latest forecast showing they anticipate one more increase, according to Republican Representative Kevin Herron. Employers will no longer have to provide employees with health plans that pay for certain preventive health care services, including drugs to treat AIDS and HIV. Russia arrests Wall Street Journal reporter on spying charge. Uh-oh. The cost of home ownership has surged 71% over the past 3 years, compared to an average annual rent growth of 6.3%. Congressional Republicans said billions of dollars in U.S. assistance for Ukraine may be misspent and could be better used for domestic priorities. Michael Burry tweeted, "I was wrong to say sell." I guess that means maybe sell now. I think he was being sarcastic when he tweeted that, so. Natural gas storage numbers came out. Estimates were 54 billion, actuals 47. But nat gas is still down. I close my nat gas. Oh, there's a flush on Natty. Natty Gassy. EVTL still up 5.4. SI hanging out the low. New low there on SI. On SI. If it's a false break and it bounces, but I might close. Might close that. I did just add to it, so I'll leave those. My high is so flat today. Good company, that's GME bag holders. Yeah, GME's looking really nice. I'm moving down a bit. I'm looking to see if I want to exit SI here or not. Birds is up 4.5% from down like 8%. Wow, so good show of strength here. Shares were definitely the play with birds. Yeah, PYXS was mentioned. Birds are flying. What do you know? Yeah, there you go. PYXS. 25%. R.I.P. BBBY. R.I.P. baby. It'll be back. Maybe. Fly, little birdies, fly. Bourbon 1. Keep seeing this thing up green on my watch list. Crazy. Alright, I'm getting out of these. Okay, so I'm gonna hold on to the ones I bought this morning because I don't think I can day trade on this account. Or maybe I can actually. Yeah, I can. I just have so many per week. Is that right? See what it says. Yeah, I can. But do I want to? That birds bounce nicely on that level. $20 billion market cap just for one of them. Wow. SIs and distribution. Oh, on a shorter term. I'm not looking for Wyckoff in such short time frames. But yeah, you can also see just a head and shoulders here. But I see a bigger bull flag, so that's basically why I'm closing here, because it's breaking down below support from the flag, at least what I thought was a support. I guess support could be a little lower. Wish I opened more covered calls. This would have been a more profitable trade. Yeah, I got out of birds. Could be doing a little RSI divergence here. Could also find a little lower support on the flag. But, yeah. Yeah. GME consolidating nice in a bull flag. 5 minute BBY bear flagging down here. BTL kind of consolidating it at the highs. HLBZ is up 1%. MCB. Oh. Squeeze soon. BY or SI? The SI has potential. I mean, it maybe needs a news catalyst to get it going. I mean, it had a huge rip. I guess I'll wait for it to settle down before I add more. They could probably come down more.
Energy, rhetoric, and all the things that, at the end of the day, fossil fuels aren't going away, and we want exposure. We want exposure to energy, and I don't want to get into politics, but with the energy policy that Washington is dictating to this country, which my mind, makes absolutely no sense. It's just a further reason to own energy, because until that changes, there's going to be a lot of upward pressure on the price of oil.
All right, last but not least, you wanted to talk about insurance, because there was some talk about whether or not the regionals, the way people started to get nervous about the regionals, that they may get nervous about insurance next. You don't necessarily think that's true.
No, well, listen, first, I'm not an analyst, you know.
Right.
But we like insurance because insurance they have tremendous reserves. You know, and by statute, you know, basically to back up the policies, and that money has to get invested. And you know, they, like all of us, have come out of a zero interest rate environment.
Right.
So now all of a sudden they're looking at interest rates
right.
where they are as opposed to where they were a year ago. And yes, they probably they're lugging some of last year's investments, but all that new money is getting invested with much better returns. And I think, I've been in this business 60 years. If I had to pick another business to go into, it would be the insurance business, and in particular, the reinsurance business. I think it's a spectacular business. These companies are well run, they have terrific reserves, and in my opinion, they're a good proxy for higher interest rates. And I personally don't think interest rates are going down. I think where we are now is some kind of normalization, and I think we're going to be in this area for many years to come. And so you want to own companies that can take advantage of the higher interest rates, and I think insurance companies are a perfect place to be. The one we like the most is Chubb, but there are
Chubb,
others.
that's the name of it?
Ted Weisberg.
Yeah, Chubb.
I'm glad you're here. Come on, not 60 years. Cut it out, Ted.
Well, it's
Ted
true.
Weisberg, founder, president, Seaport Securities. Thank you so much for being here today. Coming up next, disruptors. Netflix reportedly ramping up its presence for video games. And George Sillis has all the details. Next.
MCB, what do you got? What do you got, Maine? Metropolitan Commercial Bank is a mixed bag of problems. Okay. Okay, Maine. Chubb's a great company. I don't know anything about it. Ravana, 13%. This thing kind of keeps moving, huh? eBet's up 9%. EVTL still 4. Birds 1.6. Be sure it's disappeared overnight. I think it could get a squeeze. I mean, when you think of a squeeze or price appreciation, it's percentage wise, usually. So you have a price target, that's one thing, but it's been going the wrong direction. That price target is harder and harder to get to. It's further and further away. So I think I could move up 50, 100%, a couple 100% even, but it might be from 50% lower than it is now. So then we're back up to where we are, essentially. But that said, I think it'll probably be, I bet it'll get back up to $1. Or more. Double digits now, maybe with a crazy catalyst. But I think it'll fill this gap at $1 at least. How low it goes before then, I don't know. $1.03, maybe $2.25. Fundamentally, it doesn't. The news has not been good. It's been basically bad news after bad news, and speculation behind the bad news has worked up until maybe today. with them offering these shares. Oh, you do use Chubb? Nice. Alps. They're still offering dividends? Should consider maybe cutting those divvies. Not before July. No, there could. I mean, there could be a catalyst comes out, news after hours or earnings next month that could cause price action to the upside. If you're looking just at the cycles and kind of the timing of when stuff moves around on BBBY, yeah, it's been in. Cyclically, it wouldn't be till like June. Yield looks strong. Thanks for your thumbs up, guys. Rough day for BY Investor today, but you guys are still showing your support, and I appreciate it. That's 41 likes we've got. Well done. There it is. Sell is it one person? So the wording on the filing is that it's at the market offering, so it's on the open market. It's not going to be a single person. At least that's how I understand it. Yeah, Neo with the little gap up, holding strong, 5%. This chart does look pretty good. Mm-hmm. Still got game. Got GME, that's right. I actually added calls on GME today.
Now, with the shares at the highest point since February, as they've been creeping back higher, how would you go about trading it?
So I'm going to use creeping back higher as part of this trade because, ideally speaking, it's in a trend continuation pattern, and it might end up moving slowly but surely up to about the $370 level. So what we can do here is play a bullish trade, or a bull call vertical in this case. So what we're going to do is go out to May with about 50 days to expiration. And we'll purchase a $340 call option, and then simultaneously we'll sell the $350 call option. So altogether, it'll cost the trader about $5 per share or $500 a contract. So ideally speaking, you're risking $1 to make $1. In this case, $5 to make $5. And we'd like to see, of course, the stock go above $350 at least or higher in order to make that $5 a share. The break even on the stock for this trade is $345, so at least has to get to there to break even. But if it doesn't make the $340 range, it's a trade that incurs a full loss. So you're risking $1 to make $1, and all the stock has to do is just inch higher or creep higher, as you alluded to, between now and expiration, above the $350 range in about 50 days.
All right, George Sillis, thank you for that. A good look at an important name. Netflix, everybody loves talking about Netflix. Thank you, George Sillis. Coming up next, our panel is ready to take a look at the airlines group. People tightening their budgets. Now, will travel demand be high this summer or begin to wane? That's next.
Highs coming down here. Starting to fill this gap. Unable to sell covered calls here for some reason. BBY is coming down more. 18.5%. It's getting close to that low of 65 cents. EVTL holding up good. Birds flat. Size still kind of melting down.
But also, you know, tighten their belts and save a little bit of money at the same time.
And so with business travel sort of, you know, we could just quantify it as less than it used to be. People don't go to the office, right? They're less than present than they used to be. That being said, Ed Batowski, what do you anticipate?
Well, I anticipate as an investment. I mean, the category, there's so many things that can go wrong with this category that, you know, I really don't believe that this is an area where I would be putting any money at all, because you have higher fuel prices, and fuel prices can shoot up really quickly, and these airlines might not be able to head to that quickly. And also remember that labor costs are a huge, you know, it's the biggest expense to an airline is labor costs. And these, you know, everybody is looking at inflation and looking for more money, and these unions are negotiating, and just recently United Airlines settled in on their contract with their labor unions. But you still have Delta and Southwest and American Airlines, you know, the other big three that are still in a process of negotiating with their unions. So this is not a category I would be investing in.
Yeah, well, I was just looking at the Jets ETF. Something I used to follow closely, and I just haven't looked at it in ages. I spent a lot of time looking at the airlines themselves, but that ETF really is well off the highs of 28, just not bouncing back. Lindsay, the other thing is, you know, we had a lot of issues with these airlines.
Jeez, BHC, holy smokes.
Delays and staffing to
down
point,
15%.
Labor, pilots. You know, do we have the
Off from
trust
that tweet, huh?
that the customers need to really put their money back into traveling?
I mean, the short answer is no.
Wow.
It's something we actually track on a monthly basis and have been for more than a year now. And
That's
we've
crazy.
seen among travelers in general, trust in airlines has ticked down. And that's especially true among frequent travelers. And at the same time, the complaints that have been filed about, you know, concerns that people have with delayed flights, canceled flights, lack of compensation, all of that has increased significantly since pre-pandemic. You know, the government's also doing as much as they can to kind of tell consumers what they are entitled to. And so there's a lot more clarity now than there used to be about what you deserve if your flight is delayed or canceled or you have to change your plans. And so that tension is really growing. You know, people don't necessarily trust airlines to have their best interest in mind. And at the same time, they're becoming smarter and more well-informed about, you know, what should happen if they do have an issue. And airlines, in many cases, are not necessarily delivering. So, you know, airlines have a lot more work to do to kind of get back to where they may have been pre-pandemic and to combat some of those faltering perceptions.
And that being said now, and I think you're right, I think that we're all learning. The airlines too are learning, maybe don't charge fees when a major storm comes in and everybody has to change the flights, or don't leave people on the runway for 6 hours with no water. I mean, I think everybody's in a learning curve here. That being said, Lindsay, what names or what companies for these airlines seem to be better positioned than others? I think there was a lot of concern about the debt that these companies took on, but you still have consumers paying some very high ticket prices to compensate.
Yeah, absolutely. And while it's not necessarily my wheelhouse to talk about it specifically who's positioned to do well financially, I think what we see from a consumer demand perspective is that, they're still booking with the major airlines. So yes, Southwest faltered over the holidays this past year, but they had a really deep bank of loyalty to kind of tap into. They're a unique brand in the space. So, those who are the most loyal Southwest consumers are kind of going back to them again. And honestly, when it comes to air travel, consumers in the US, just don't have as much choice as they do in some other markets. And so in many cases, even if they don't trust airlines or they're feeling, not great about booking with them, they don't really have much of another choice aside from maybe taking a road trip, which is a little bit less efficient if you're, flying from coast to coast.
Yeah. I wasn't ready to be sitting in those airports, Ed, like everybody was telling me they were last year. I actually avoided flying because there were so many cancellations and so much chaos. What are your final thoughts? You did say United and Delta seemed best positioned. You had a dividend on Southwest. Also, but you didn't love this group, Ed. And then there's, cruise lines, airlines, hotels, casinos. Is there anything that you do love in all that?
Well, I do like the cruise lines right now because the cruise lines are, they've taken on a lot of debt. Carnival Cruise Line has taken on a tremendous amount of debt. But I do like the idea of them being booked out, and they're able to take those costs and put them onto the customer. So there's so many customers. You have about 6,000 people on one cruise ship, then you can spread the additional cost onto them. But from an investing standpoint, I think the hotels are the best position right now to kind of swing back. And again, the airlines just have too many expenses, and the variables are just too great for me to be able to recommend it to clients. But I am happy you brought up that Southwest does pay a dividend, which means that they have extra cash, which means that they're really in a good position, as opposed to United and Delta and American Airlines. I'm based here in Dallas, and that's where American is. I don't like American at all.
Okay. Ed Butowski, Lindsay Roschke, thank you so much. Great to see you both. Thank you. That's going to do it for us here on Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange, 11 a.m. and 2 p.m. Eastern Time. Keep it right here. Fast is next.
Thanks, Ryan. I appreciate it, man. BBY retesting those lows, 65 cents or so. Yeah, Bobby's not doing too hot. EVTL still up 4%. Is up 0.5%. Leave it on BBBY for now. The music. Alright, guys. BBY back at the low there. Me bouncing on VWAP. XX. Whoa, what the heck? I don't know what's going on with the XXII. Weird. I closed out of this when it broke that support. They just had a rally back up to it. This all today. Well, that was. Some of it was yesterday and just kept going. I'm not sure. Maybe news came out or something. But yeah, once it broke there, that's when I closed. Looks like it's fighting to get back above it. Or it's just using that as a resistance now. Weird, looks like something came out on that. Average down. If you were going to, I would be just patient too. I was going to wait for momentum to shift to average down. So this was consolidation. Next thing I was waiting for was a break to the upside, confirm an uptrend. And then I was going to consider adding. You've got consolidation at a break to downtrend. So now you're back in a downtrend basically. So until it shows signs that it's not downtrending, I would wait to average. But with that, you also have to be okay if you miss a move after hours, or depending on how close you're watching it, because there could be a news catalyst that comes out after hours that causes it to rip up quite a bit. But that's a safer way to trade than just dip buying, because dips can just turn into more dips. Based on the community, yeah, I mean the price action would appear so. Get the rally up, and now it's definitely just consolidating. So that's why I keep adding to it. It seems bullish. As long as it keeps holding the support, it's looking bullish. Yep, keeps finding support on this range. So nice looking bull flag on. You include the extended hours here with their earnings. And that's kind of the range I have on it. Jenny.
Alone. So it's important to keep in mind how essential this is to so many families, and they have said they were committed to keeping these prices low. We'll see, I guess, how long that really lasts, because it does feel like at this point everyone is being hit by inflation, but they are one of these lower priced companies that benefits so many Americans just based on how many Walmarts there are across the United States.
Yeah, over nearly 5,000, 90% of the population within 10 miles of one. I'm sure you grew up near one out there in Napertucky in the Illinois suburbs there, Jenny.
Of course I did. I grew up near two.
I'm guessing you're right.
Either direction, usually.
Proving my point. I get it. All right, great stuff from Jenny Horn here, markets correspondent here, breaking down the news on Walmart. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. Thanks for being back here, Randy. We're talking about the NASDAQ a little bit earlier. It's been leading this week, this month, out of into bull market territory. It's 20% higher off of its lows that we saw in late December. So we're seeing some momentum there. It's kind of carried the overall market so far this month. Is this going to extend gains? Because it seems like they're Teflon coated against maybe some of the other crisis that's out there in other sectors, or maybe slowdown in the economy because they don't have a lot of exposure maybe to some of these downbeat sectors within the economy.
Well, I think part of the story with the NASDAQ is just taking a look at what happened last year. The tech sector got crushed. It was down almost twice as much as the S&P 500. But literally on the first day of this year, in much the same way as the bear market began on the first day of last year, we went from a very defensive stance to a very cyclical stance. And tech is generally going to be the leader, and consumer discretionary when that happens. So that has been very resilient. But as you guys were just talking about, I mean, the market's been up 4 out of the last 5 sessions and something like 18 out of the last 25. So there's clearly a much more positive momentum right now. I know it doesn't feel like it. Everyone's complaining. Everybody's talking about recession, how bad earnings are going to be. There's banking crisis, you name it. And yet, remarkably, as of this moment, the S&P 500 is literally less than 6% away from starting a new bull market. No one feels like that, but that's actually what's going on. And again, when you've got momentum to the upside, when rates are coming down as they have been, when you are in a cyclical bias, you're going to see tech take the lead, and that's what we've been seeing.
Yeah, Kevin, to Randy's point, if you look at maybe the economy, what people think is going to happen to the economy versus what the market thinks, right? They're two different things. But shouldn't the market, the optimism out there in the market, maybe some people feel like it's getting a little bit frothy compared to what they might think about the economy at this point and the struggles that might be coming down the pipeline, post earnings, getting into the second half of 2023. Sure. It seems like they've diverged and continue to diverge at this point.
It's interesting. For our viewers, if you want to do something fun to look at, put up the relationship between interest rates and high cap tech.
Yeah.
And the inverse relationship there is interest rates go down, high cap tech rallies. Now, some of this is news related, right? They've had some good news, especially in names like Meta that have outperformed. But Tom, two things. That is one. The link to interest rates. And Tom, you know this, Randy knows this. The hardest way to get stocks to go down is to have everyone be bearish. And it is pretty consensus that everyone thinks some slowdown, some market movement to the downside is coming in the future, and that just spells, in my history of watching these markets, a stingy market. And the lack of inertia on the downside means upside in some of these cases. So it's always frustrating when it feels like the whole industry is bearish, yet stocks don't go down.
Yeah, it's that contrarian type of play, and Warren Buffett talks about that quite a bit. But Randy, we've got the CME FedWatch tool only expecting about 50% chance of a quarter basis point hike at the May meeting, that first week of May. And it seems like we've gotten a bid back into into yields so far this week. It hasn't really negatively affected, especially big tech, as Kevin mentioned. So is that divergence going to break? Because right now, the Fed Fund swaps markets are pricing in about 50 to 75 basis points of cuts by the end of the year, and I don't know if that's going to happen.
Well, again, if you look at the history of the Fed Funds futures, you get changes in rates, both up and down, only when that probability hits 60% or more. So around 50%, that means it's still unlikely to happen. And then if you look out to the next two meetings after that, you've got a single-digit negative number, which means a very small probability of a cut. Given that,
there's another reverse split
that
one.
Tells me we've got 3 consecutive meetings coming up where the odds of any
huge rally before the reverse split
are very small. So I don't think that's going to happen now. Again, those numbers change all the time, as you know. Every
seems like that's more often than not lately.
That 60% number is based on the percentage the day before the Fed meets, or the day before they're planning to either make a cut or a hike. So that can certainly change. It was much lower just maybe a week or so ago. That was down into the 20% range, which was very small. So it's kind of on that cusp. But yes, I mean, the thing is that Jay Powell
looks pretty good.
Committed to not cutting rates. And I think if the markets remain stable, if the banking crisis continues to subside as it has, then that may be a possibility. But if things get rocky like they were just a couple of weeks ago, I think he could do that. Remember, the Fed won't cut rates to maintain market or to address market volatility, but they will cut rates to address market or financial instability. And we had a little bit of that showing up just a couple of weeks ago. It's not there at the moment. So that's really going to be the pivot that makes the difference.
Yeah, that optimism that we're through that little mini crisis that we had in the financial sector is really lending some support to equities here, Kevin. But on the Fed side, they're still dealing with, a jobs market that's really tight at this point. Jobless claims came out, again, under 200K. I think this is a real psychological level for investors and traders at this point. Until we get some upside, 9 out of the last 10 weeks, jobless claims have been under 200K. That's not what the Fed wants to see, but we did get a revision, or we did get a move up in them, just about 198,000. If that starts moving above 200,000, maybe that gives the Fed some credence to some of the things that they're doing as far as tightening goes are taking hold.
Yeah, but Tom, you know the history of
There's
this
a new low on BBBY, just flushed through the 65 level.
230,000. You need higher than
50,000.
Look for 60 next.
Exactly. You need higher numbers. I mean, even something as low as 220. That still implies a strong labor market.
Yep.
So you need numbers significantly higher than we're seeing right now. And what does that tell you? Does that tell you that maybe people are getting laid off in these high tech and getting jobs right away? right? They're not even spending any time unemployed.
Or they're not filing yet because they maybe have gotten a severance package and they haven't filed yet, right?
I mean, there could be a lot of reasons why those numbers aren't hitting, or those numbers are being overtaken by hires that could show up in the JOLTS data. But yeah, it's tricky, right? I mean, people that getting laid off from high-tech firms probably
Did they send calls for tomorrow?
Employable traits.
Yeah, you might get a bounce today or tomorrow.
So maybe they're not spending any time unemployed.
I don't know if you're making money on calls,
tech sector who has been leading the way. But Randy, when you look at the leaders here in the NASDAQ, going back to that particular sector, you know, you see Meta Platforms up 72% so far this year. NVIDIA up nearly 90% so far this year. Does that frighten you a little bit, or should it frighten investors where you've got a few of the big names that are big components within the major indices, especially the NASDAQ and S&P 500, that, you know, that can't be sustainable, and they cannot continue to carry the entire market at this point?
Well, obviously, it would be
EVTL.
better to have the rally be a little bit broader, yes. But again, keep in mind, when some of these companies were down maybe 40% last year, if you're down 50%, you need a 100% rally just to get back to where you started. Don't forget how
coming down to the lows.
Those percentages work. But there's plenty of data to support all the things going on in the labor market that you guys were just talking about. I've seen a number of reports that say the amount of time it takes between when you file an unemployment claim and when it actually gets processed is about 30 weeks. We know that the amount of time that someone who loses a job in high tech gets rehired is less than 30 weeks. Most of the cases, they're probably not even filing, especially, as you said, if they've got any kind of severance. And even a stingy company will give somebody 30 to 60 days of severance. So they're like, hey, I'll just take a little vacation here for a while. I'll get a new job. It's also been beneficial for all these other companies that need technology workers, but they aren't necessarily known for tech. You know, a good example is a company you were just talking about earlier, Walmart. Walmart's a massive company. They employ tens of thousands of programmers, but we don't think of them as a tech company. If you get laid off at a place like Facebook,
there's 61
which is
cents.
Actually not a tech company either, but we sort of think of it as one. There's opportunities for those people to get jobs in all these other companies that have actually been looking for people for a while, but they couldn't afford to compete with these Silicon Valley firms that have paid way too much. Well, now that things are a little bit tighter, they have to sort of tighten up their belts. They're letting some of these overhires get away, and those people are able to get jobs elsewhere. So I'm not necessarily convinced that we have to have higher unemployment. If the employment stays level and inflation rates come down, well, that actually is that.
I guess reverse split, you might see a rip up before that.
Yeah, they have, and you make a great point there.
I
love that.
Still no
because,
date on
you know,
the vote.
John Deere's hiring tech workers.
Or if it'll go through.
Caterpillar.
They said in the filing they released today, if they don't get
makers are buying, hiring tech
if reverse split doesn't go through, they'll probably have to file for bankruptcy.
They couldn't fill. Remember all those job openings that were open, 11 million of them basically. So still a tight job market, but we're going to continue to focus on travel in the next few segments, and we're going to start with United Airlines when we come back from break. Shares are down about 15% so far this month, despite that continuing demand we've seen for air travel. Fast Markets coming right back after this short break.
Next catalyst would be reverse split or earnings. Both. Well, the earnings are next month. We don't know when a reverse split would be yet. We still haven't decided. We still haven't set a date for voting or anything. And then after that, I would say is probably just a cyclical move if it's not bankrupt by then. Of, you know, what you get every 20 to 20 bars or so on the weekly chart here, which will put it out in June. Yeah, kind of end of June, July. Someone buys a company require a share count? Not sure. Not necessarily. No more casino trades because I'm bored. probably a good philosophy. Yeah, I considered. I was trying to do some research, but yeah, same deal. Like I saw that bounce, I'm like, So I was wondering if it. I thought it could have maybe even started ripping based on more information on the filing being interpreted. So that bounce is kind of interesting, and I was kind of trying to figure it out still at the time too. So I didn't get, of course, a great fill, but this wasn't a whole lot. So like 5-6%. GME now negative, a low VWAP there. EVTL looks like it wants to climb higher. Quick buy can go in BBBY RSI divergence. If you want to day trade it, I don't know. Yeah, it hasn't shown any support levels yet. It had support here, but then it was just bear flagging. So yeah, we're just breaking out of that bear flag now. Even like this bounce was quite small, but that'd be timing the bottom perfect. We're getting close to that 60 cents. See if I find support there. You're down only 60%, that's pretty legit. After a 25% move especially. There's definitely a lot of meat on the bone left to recoup losses, but yeah, it's pretty low right now.
Next quarter. Now, Randy, they report earnings on the 19th of April tentatively at this point. So how do you want to look at this from an example trade?
Yeah, so we always try to come up with a different example and a different scenario. And again, not my opinion, but here's an example of one where, unlike a lot of these trades we do where it's just before earnings, we've got about we've got about 3 weeks here before earnings come out on this one. So if you look at the history of what happens around earnings times, what you find often with this stock is that it runs up in price as it approaches earnings. But then when earnings come out, it's got a history of sometimes gapping up, sometimes gapping down. But so you don't really know which way to play it, but
Buy at the
historically
low.
it does have a tendency to run up into earnings, and perhaps the move we've seen
BBBY
in the
almost
last
at
3 or 4
even
days
60
here
cents.
is the start of that run up into this next earnings report. So let's say, as we usually do, that you believe that might happen again, but you're not sure how the results are going to come
Too
out.
low on SPY there.
Well, is there a way we can play a strategy where we play the part that we know is relatively consistent? That's that run up. And without getting into trouble, or I should say without sort of being in the position as we approach earnings. So what I thought in this example was, let's take a look at an option that expires just before earnings. We know earnings are coming out on 4/19. In this particular case, we can't use the regular Aprils because they expire after that. So we go to the weekly that's available right before that. That expires on the 14th. And a way to play a strategy that would take advantage of a couple of things. One, you know that implied volatility starts.
Volume is going to be good today on BBY.
And then, of course, anytime you get into positions, you know that they have time decay. So the example I put together here is a weekly put vertical. We're going to buy the April 14th, which expires 5 days before earnings, $40 put, and then sell the April 14th $45 put. So this is a credit put spread. A credit put spread is a bullish strategy. The goal here is to collect your money up front and then hope everything just disappears at expiration, and then you keep that credit. When I looked at this about a half an hour ago, you could do this at about $1.50 credit. Now this is a 5-point vertical, so that means you've got about a $3.50 max loss with a $1.50 max gain. Now, the interesting thing about this strategy is it sounds like a bullish trade, but this is actually not a bullish trade. This is a not bearish trade. In other words, you don't really need the stock to go up at all because it's actually already in the money. You just need it to not go down. So it's a very conservative trade. The break even on this one at 43.50, which is below the current market price. But this one has a positive delta of about 40, which means you're going to get about 40 cents gain for every dollar up it moves between now and then. And it's got a very small positive theta, which means time decay is going to work in your favor as you approach expiration. And the reason for that is the one you're selling is more expensive than the one you're buying, and so therefore it has more time value to lose as you approach that date. So again, this is one way of playing the typical increase in implied volatility, the typical run up into earnings without being
I didn't like it very much, but it's moving.
Earnings because we don't know which way it might go.
Right, let's break this down, Kev, real quick.
April you called this out way down here, huh?
Weekly series, so expires in 15 days, selling the 45 put, buying the 40, collecting roughly about $1.50. I think it's trading about $1.60 now because the stock has come down, the market's come off its highs. But if you collect $1.50, that's what you can make. You got $3.50 in risk per spread. You've got some assignment risk on that.
This still being a catalyst for BBY to
but you only need a dollar move up to the upside over the next 2 weeks to get above that 45 level, which is what you want in this type of position.
Seems like they probably will now.
Interesting factor about this trade that Randy has
already
mentioned is it's already through its break even. So if the
saying
stock
that they're going to have a reverse split and not
nothing,
going out with it,
you're profitable on this trade. So it's an interesting way to do it. But yeah, look at the delta on this trade. It's a short put
which is
vertical
still
with
kind of
nice
interesting because
a
lot of stocks trade under $1 for a long time before they
time decay, as Randy mentioned, works in your favor on this one because it is that short put spread. You're selling the higher price put on that, and you know, with the expectation on this type of example that you need the stock to run up $1 or more.
Thanks, guys, for your likes. I appreciate it.
Credit that you collected on the initial trade on that short put vertical. All right, good look at that strategy. Thanks to Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, for joining us, breaking down markets and UAL. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Royal Caribbean Cruise Lines, which is up about 31% so far this year and has moved higher over the last 8 months. Stick around, coming right back.
Get rid of our drawings. Broken through all supports. Hey, big hugs. 73. Oh, there's your bounce. Not 73 cents, but 73. Alt's down. Probably didn't move fast enough. Yes, BBBY. EVTL has a head and shoulders on the 5 minute. Yeah, does. Looking for it to break this low though, kind of the neckline. Right? So I mean, real confirmation on head and shoulders has to break the neckline. To me, this is the neckline right here, this low. Otherwise, it's just consolidating up in this level. And on longer term, yeah, you can see it's bull flagging. So, buys edging down. Oh, they had earnings. Sure. New low on SPY. Carvana came down. SI just kind of holding just below that level I have on there. EVTL at the highs. Carvana put, nice. Double top. Where's the double top? Yeah, just intraday, like short term. Just like this little double top. Yeah, I mean, it did double top, but if you bought it here, you kind of got lucky too, because could have just consolidated and bounced here just as likely. But yeah, it worked out. And I could have just made a move to VWAP even, or even here, which you maybe still would have made money in the put. All the way down here is yeah, that's nice. This big of a move to the downside is a little unusual after it's looked so strong and mellowed to the upside. So buys moving down more here. Not playing the futures on it. Don't like any setup here. Guess you just got like weekly at the monies. I should probably do that more. There's like so many different ways to lose money in the market. It's hard to pick which one. Or make money, but big drops after huge quick spikes. Next buy wants to fill the gap here. Yeah, Carvana does move.
Yeah, I think one of the big
GME and
keys,
BBBY,
you know, going into their earnings, their next earnings is going to be how they're handling their debt, because they always give those mid-quarter updates that say that, you know, bookings are solid, back to 2019 levels, even higher at that point. All right, great stuff as always. Thanks for the data, Andy.
Thank you.
That's Andy Swan, co-founder of Likefolio, breaking down RCL. Kevin, it's for an 8-month, you know, move in the stock.
No more
it's
shares
been,
to borrow.
Pretty consistently moving higher. Up
well, you don't know about shares to borrow.
32% so far this year.
Someone wants to borrow a share,
I'm sure. It seems like people are not
give them a share to borrow.
On travel and experiences, and cruise lines are right in there.
No, and was something Andy was alluding to was
diluted.
that
it's not diluted. They just had a share offering this morning. They said for 300 million.
Less
they could be doing that right now. I'm not sure.
Than others,
so that's another catalyst. Once they've
that's what you're seeing. You
diluted that amount, that could be a bullish catalyst.
Lululemon was one of them. RH, right?
That's maybe what we're seeing here.
But that stock is barely down on this. So
yeah,
the high-end consumer is less elastic than some of the others. And Tom, when you look at the stock in RCL, it's interesting on the chart. Look at this 60 level on the chart. It was resistance.
Kind of flushing a little bit.
You know, the end of last year, November, and then it was big support about, you know, well, really into early March. And look at how many times it's that 60 level, some significant support there. So Tom, you could do something on the put side there, but here's the thing, not a big premium name. It doesn't trade with big put premiums that would cause you to do that. So what I did, Tom, looking for the right strategy here, I just went with the 1 month, the April 6th and to the April 28th. So next week to the end of the month, the 70 call calendar. And that's trading about $1.30, $1.32, right around that level, Tom. And this is just looking for that, much like the chart of Royal Caribbean, that slow grind towards a higher strike price.
Right, and you avoid earnings, Kevin, which are on or around May 2nd. So setting that up with maybe a grind higher into this. Let's break this trade down. Buying the April 28th weekly 70 strike call, selling the April 6th weekly 70 strike call. So creating that call calendar that's above the current share price. You're paying roughly $1.30 down for it. That's going to be your risk with the apex of profitability at or near that 70 strike. But Kev, you got a nice wide range of about 65.5 up to 75.5, where you can still remain profitable on this. It's a positive time decay trade because you're selling the closer to expiration options that expire in 7 days on the 6th. Now you do have some assignment risk on that short call, but you do have the ability to roll that option if the market's open and liquidity is provided on a week-to-week basis, creating credits, reducing your break-evens or increasing your break-evens, reducing your risk, and increasing potential profitability on that strategy. But Kev, this is one of those flexible type strategies, right, where if you have an assumption over the next 29 days that this stock is going to grind higher, you can pick that strike. If you think it's going to go down to 60, you can pick the 60 put calendar, right?
Yeah, exactly right, Tom. I mean, the learning part of this segment is the strategy. And if you think about it, it's about a 3-week calendar, right? So you got a couple chances to extend duration. And right now, the 70 call for next week is trading about 25, 26 cents. So think if you could do that 3 more times, you could take a big chunk, a big risk out of this net debit on this. Even though it's trading $1.30, it's not a terribly expensive trade. There's chances to make that net debit and therefore the break even lower.
And those 1 week rolls can expand to over $1 if that.
If you're going to move towards 70.
Yeah, if that strike is at or near that at the money option there, if it grinds up towards 70. But a good look at that strategy with a debit, and that's what your risk is on it, $130 per spread. All right, let's take a quick break here. And when we come back, we're going to talk about another travel company, and that's Airbnb, which has rebounded about 42% so far this year after hitting all-time lows.
Yeah, I had that one in my long term. Closed it out. That was a big bounce. I closed it like 170, I think. 75. Yeah, I cover calls. It closed out. I'll do cash secured puts on this. Maybe back at its lows. Valuation on Airbnb is pretty high though. But I like it. I like it for long term. Let's see what more people are talking about this BBBY filing. Looks like the news on Webull summarized it that way. Yeah, it added it was terminating its previous public equity offering and all outstanding warrants for Series A. So maybe it is a chess move. I'm not sure, but I'll wait for the TA. The company had planned to raise around $1 billion through the offering of preferred stock and warrants in the last-minute attempt to ditch bankruptcy. Had so far raised $360 million through the complex deal. Bed Bath said it expects fourth quarter comparable sales to decline in the 40% to 50% range compared with analyst estimates of 26.3%. So they basically said they're going to miss even expectations on their earnings. Retailer added it also expects operating losses to continue And fourth quarter net sales to be about 1.2 billion compared with estimates of 1.4.
On the U.S. dollar, as we've seen ultimately that narrative that the Fed's heavy lifting's been done, right? And so, and the other thing in terms of that, right, chicken or the egg, I also like to think about the tail that wags the dog, and that tail being the euro currency ultimately, which has strengthened some, so the dollar weakens as a result. And tomorrow we're going to look at the EU CPI, Tom. That's a very closely watched event in Europe this week. Today, German CPI, while it did come in softer than expected, at 7.4% still year over year, down from 8.7, but that's just signaling again that the ECB's got a little bit more work to do than the FOMC, and I think that's why we're seeing the dollar weaken here, and that is somewhat supportive of the move up that we saw in stocks earlier, yeah.
Yeah, you know, it's interesting, Tom. One last thing to talk to Ben about before he goes. Look at, Ben, the regional banks in the Russell. You know, I don't want to put up a red flag here, but they're catching my attention as we get late in the day. They've all turned red, Ben.
You know, Kevin, I've been watching this kind of up and down, this roller coaster ride that we've seen, more so up recently than down. But the thing that I'm dialed in on is, and there you can see, look at this range that we've been in. We're going all the way back to April on this chart here of last year. So almost a year's worth of range-bound price activity. And there's been an enormous amount of opportunity within some of these intraday swings here, Kevin. But look at this.
Yeah, I mean, the sales are going to come down. That's actually not
it took out the
as low as I was expecting. But I guess a lot of the store closures probably happened after they
still in the middle of this range that we've been in. You got the Dow.
There's
just not a lot of conviction there. The Nasdaq either a precursor to what
the
the
low.
other three have coming in terms of some momentum to the upside, or it's a little bit overextended, and we could see it roll over.
Sure,
and
kind of broke the support level.
Kind of
That's why I got out of it. So
in line with what we've been seeing from the S&Ps,
technical
the Dow,
level,
and the Russell.
It rallied up the other day with volume.
Good stuff. As always, Ben Lichtenstein here joining us, the host of the Future Show here on the network. Thanks for the market update. But now we're talking Airbnb. For that, we're going to bring in first George Tillis, senior markets correspondent here on the network. Help us break down the backdrop of this company. George, I mentioned the stock's up over 40% so far this year, severely outperforming the hotel space. But this stock is coming off of all-time lows that we hit last December.
I don't like dip buying anything necessarily.
How does this company
unless
look
it's something I'm holding for the long term, like for a trade
it
though.
Actually looks pretty good. I mean,
I like
I'm going to call this really a tech travel company. It's really a technology company. It's got very high gross margins, around 80%. But we know Airbnb, it's nothing.
It's got a gap down here.
What the business is,
very well fill it. 62 cents.
Largest experience bookings business out there. And if you think about the travel and leisure industry, there's been huge demand, especially for travel services. Now, the stock is up 40% or so in the last year, and it has to do with the fact that this is really a tech company. We've seen that huge tech rebound since early January, but there's actually quite a bit of financial support to back the move as well. Now, if you look at
earnings next week,
reported earnings,
I don't know enough about the company fundamentally to say
they reported 48 cents
anything about their earnings, so that could be a catalyst for a move up or down though, for sure.
That was higher than 8
so
cents
it's a sketchy trade through earnings.
So we basically had fourfold increase in earnings.
All right,
per share,
GME's coming back down.
With sales that
could
were
cause a
higher
run,
by
could
about
cause a sell-off.
24% year over year. Gross bookings.
Thanks for your likes, guys. I appreciate it.
The average daily rate also increased by about 5%, and I think it's a very interesting company from the standpoint of profitability, because if you consider effectively the amount of net income the company generated on about $8.5 billion in sales, they generated about $2.2 billion in net income. That's essentially GAAP earnings.
D3, appreciate it. Thank you, guys. See if Jimmy bounces here on this support again.
For any travel or hotel business, which again, I'm not necessarily
going to flushes through any of these days. It's probably a pretty big flush, given how much it bounced off of it.
Asset-light business model. Airbnb
BBBY, little bounce.
Is a technology firm. It's essentially
back down
a network.
Since there's no supports down here again, it'll probably just trade at the half cent,
like,
or like 50 cents, 55 cents.
Capital capital allocation.
So far, it's been doing that. So found support at 65 cents, came down, found support at 60 cents.
Forward earnings really
breaks through here, look for 55 cents. But I mean, it's already down 22%.
It's trading around 1 times 30 growth rate on a forward basis.
But it's not.
But
It's
like
looking
I said,
like it could keep coming down. Momentum's
net
down.
income margin of 23% is quite remarkable. If you want to put this in the same camp as the travel and leisure space, like the hotels, which I don't necessarily suggest you can, because again, they don't actually own the host properties. The hosts do, and that's one of the benefits of the business.
George, higher booking volumes, increased in daily rates. They're growing into Latin America. They're growing into apartments. They're trying to expand the number of days people stay. There's a lot of good things about this company, George, going forward. But, George, it's also starting to show up in the valuation.
Oh,
you know, it was
me.
7 times sales in January. Now it's 10 times sales, George.
Based on the move, you're right, Kevin. Ideally speaking, it's made a huge move in the last year or so.
Crazy valuation.
But I will say this: you know, the company, like I said, is growing remarkably, but it's also growing profitably. One of the things I did notice is the company's sales in the last year around $8.5 billion. Just think about this: the company initiated a $2 billion share buyback. They cut workforce by 30%. While at the same time, the cash on the balance sheet has actually increased to about $9.5 billion. So they effectively have more cash on the books than 1 times annual sales. So it's got a strong balance sheet. Its profit growth is there. But like you said, with the move it's already made in this last year, it could essentially consolidate or a pullback based upon the fact that it's made a huge move already this year, about 42%.
Yeah, you mentioned that free cash flow last quarter up 21% year over year to about $455 million. Yep. So definitely, I think investors and traders, analysts like seeing that. All right, great stuff. As always, thanks, George Tillis, senior markets correspondent here, breaking down Airbnb in the background there on that company. Kev, your thoughts here real quick on Airbnb. You know what? The fees. Like when you try to book an Airbnb, it says, hey, book for 5 days, and then it's a cleaning fee, and then boom, booking fee, and it's massive.
You know, it's interesting. They're trying to add more homes. They're trying to add apartments. They're trying to add new ways. But they're also working on homeowners to get their overall prices down. Didn't mention the fees, just the prices that the homeowners are getting, Tom. And so this is still a company, and George mentioned it, the asset light business model that they have. They don't own any of the houses. They're just a conduit between the renter and the homeowner. It's pretty, you know, the margins are incredible here. But yeah, I mean, the biggest worry for me is not the growth. It's not their ability to get better. 2 things they got to do. They got to add more homes that they're having trouble with supply, and the valuation of the stock.
Yeah. Yeah, those fees, I like the asset-free model. And then if you look at the free cash flow, it kind of equates to that. They did up guidance last quarter also. They got earnings on the 2nd of May also, so that might be an event. But I looked at this, Kevin, from the fact that it has rallied basically over 40% so far this year for a strategy to look at that avoids that earnings event. So kind of opposite of what Randy did on Airbnb, where I'm looking at the April monthly cycle here in Airbnb, going out to April 21st, selling the 126 strike call to the upside, buying the 130 strike call, Kevin. This is basically a $4 wide short, neutral to bearish call vertical with cushion to the upside.
Well, Tucker had the catalyst that GNS was going to buy it, so news like that could get reversed. TA-wise looks solid. Nice bull flag. Hourly. Daily. The MACD hasn't flipped. Yeah. Longer term, it's not looking as good yet. See if GME bounces on this level again.
Well below consensus on revenue of about $772 million, also down from $902 million a year ago, also missed forecasts. The company now expects its first quarter revenue to fall between $720 and $735 million, below forecasts on full year revenue that also disappointed. Naturally, we did see analysts come in today trim their price targets. Some of those analysts being Telsey, Baird, Citigroup, and Wedbush, all reducing their price targets, though some do maintain a buy or neutral rating, so it's not like everyone is downgrading and saying sell here, but we are seeing an adjustment given this revision to its earnings that was pretty much just, they completely missed the mark here, Alex.
Just seems to be the story of RH for the better part of the last year. This company has not held any punches back when it's talked about itself and its own struggles. So when you start looking at the company and you start looking at the price performance,
yeah, GME bounced again on that level.
Underperforming
that is neat.
Kind of volatile expectation for a move potential.
Yeah, I agree, Al.
Because it's essentially
that
on
level
its
breaks
lows,
1940s.
Has
probably
painted
coming.
a pretty sour forecast
Maybe get some puts
for
on
a
it if
long
it does.
time. So this is one of the points Oliver was making yesterday in Morning Trade Live. Hadn't been enough to get a boost in the stock. But certainly maybe it's led some credence to why this has just been sort of a muted reaction, even though the stock is down 3%. I'm going to say down about
ARQQ up 10.
RH with the earnings out is having its reaction. We'll see where things go from there. Maybe one we revisit soon. Next one, though, in the consumer staples family alongside
what was your
Walmart, but certainly a different type
what
of
was
product
your
here.
price target on SI again?
Philip Morris,
it bounced back up to that
PM
level.
Is the stock ticker. Another analyst upgrade.
Another analyst upgrade. We're seeing actually a nice reaction in this name today. Shares are up about 1.8%. After JP Morgan did upgrade shares to overweight from neutral with a raised price target of $116. That's up from $109.
Not sure I want that risk,
over 20% upside from where we're currently trading. Now they said the ICOs have stepped up the company's heated tobacco share in its initial launch markets. Yet it has been impacted by some pretty severe supply chain
breaking out there.
They believe that these should ease in the second half of 2023, which will only then accelerate.
Why does this thing always always like up 50%, but the chart looks like it's flat.
Despite increased U.S. investments. They said the U.S. should provide a medium-term tailwind to Philip Morris's smoke-free business. They actually see that government support as a positive here. Philip Morris, although having a nice move higher today, Alex, shares are down about 5%
this might be a good buy on BuzzFeed.
Down about 12% from their high and up 16% from their low, but having a really nice week still. Shares up over 6% now week to date.
Yeah, and this is a different type of company than many of the ones that we talk about. I would say that the reason investment capital finds itself at a place like this is much more for almost capital to just sort of hold on to its value and this hopes of collecting income off of things that they're doing from a shareholder-friendly standpoint. But I'm going to say upvote here because it kind of ties into Walmart and the consumer staples field.
Yeah, you do have a divergence here on the
also sometimes
RSI.
A little bit more defensive investments.
A couple days ago.
A time of, I would say, increased uncertainty and tension, despite what
get
the
some
last few
exposure on
days in equity
BuzzFeed.
performance may suggest. I think make them
The
interesting
options like on
conversations
here.
for today. Maybe the charts will provide some clarity as well. Last one, though, on the list, though, is Enphase. This is a name that we've talked about several times in the last month.
We have, and for perhaps not so positive of reasons, because Enphase Energy shares are down over 22% this year, what has been a pretty disappointment, I'd say, collectively in this solar space, unless you're first solar. But Goldman today did trim its price target on Enphase Energy to $295 a share from $329, with a buy rating, saying that despite their solid fourth quarter earnings and a generally upbeat outlook heading into 2023, these solar and storage equities have underperformed in recent weeks due to increasing concerns around the financing environment. They also did mention these ongoing concerns around the sustainability of growth in the residential sector as macroeconomic uncertainty continues to loom at large, the analyst said. They did also, part of this broader note, reduce their price target on Sunrun, also keeping a buy rating, though, so they're just adjusting given the recent price activity we've seen. Now, Enphase also
on it. This might be a good go.
5%
It's up quite a bit, though.
Down 39% from their yearly high.
Divergence is there. It's not great.
So this name is volatile.
And there is one more support further down, but
this space is important not to discount.
I don't know. It looks nice.
No doubt, and this has been an underperformer within that
probably
space as well. But obviously, some price target adjustments.
Realizing that loss on BBY today, you probably just sit for a bit.
Goldman, going to say downvote though. We talked about this one
Laser.
enough that I have no doubt it'll come up again in the near term.
Yeah, I've traded Laser before.
Jenny, I'm excited to talk.
They have a deal with
some of
the EVs, don't they?
Names in either capacity that I kind of associate with next gen investing. And that's okay. We gotta look at things beyond just sort of this next gen tech stuff like Enphase Energy.
Yeah, we'll step away from our usual volatile names. We'll be diving into the charts in Walmart and Philip Morris, like you just said, coming up next.
Not a whole lot.
Technicals as well as
bearish momentum still.
Next gen investing. We'll be right back.
Gonna wait for it to hit a support and show reversal, but nothing of the sort yet. Just consolidating. So consolidating in a downtrend. So I expect it to break the low, but if it starts breaking at 680, kind of some of these highs, and might have an uptrend to fill that gap. But it seems like it'll probably come lower before it starts moving back up. Maybe 570. Got 560 back over here for its little support. There's kind of this inverted head and shoulders here, so yeah, on the longer time frame. This is all daily candles. But you need to see a break of this consolidation to the upside. GME bouncing like clockwork, man. Not bad. I mean, this is what a fixed stock looks like. Should have stayed Neo. Yeah, it's looking pretty good. What's it at now? Not much more. SPY moving up. EVTL hanging out at the highs. Birds moving back to VWAP a little bit, 2.5 down. GME still a nice bounce there. Old SG. BBY consolidating at the lows. Malta, new all-time highs. Look at all that. Not quite all-time highs. 53.752. This chart looks similar to Tesla. Gen A.
When times are good, but a name that is more resilient when times aren't so good. Is it also a name like Philip Morris, which is typically seen as more of a defensive play? As I do think there is definitely a need for these products, and in so many people's lives, this is a key vice, no matter how expensive the rest of life gets. So, Rick, walk us through what you're seeing from the technical front here. Shares in a nice rally today, up just shy of 2%, but not having the strongest year. Lower actually.
Tempted to get shares, but
no, certainly not. And we did have a strong rally off of these yearly lows here. We were in the oversold area of the RSI, went all the way up.
I mean, this was from a catalyst, this rip, so
overbought area here before
won't necessarily get that again.
For a little bit between about 100 and 104. Then we broke through that range to the downside. We've been trending down in a channel formation since that point. And after all that, we're only up about 16% or so off those yearly lows. So
kind of crazy. I've been buying the dip on GME on options like every day the last 3 days, literally every dip here, and none of them are green. And they all have almost a year of time.
We can see that we're kind of
how am I getting theta decay on leaps when I'm buying them at the perfect time?
Upward today, that gap up, but it stopped right here near the 63-day exponential moving average, that orange line, near about the 98 mark. So that is a point to watch to the upside to see if we can break through. That would also take us above this downward sloping channel here. Another point that stood out to me was the 97 mark. That's about where we bottomed out here and here, as well as topped out here. So we've got kind of a point to watch there as well. So 97 to 98 to the upside would be an interesting point to see if we can get some further breakout action here. To the downside, we've got our yellow 21-day EMA near about the 96 mark. That would be a logical place to perhaps start looking for some support here. And we are near the upper end of this channel as well. We had quite a large negative excursion below our lower trend line here, but we surged all the way back up, and now we're flirting with breaking out to the upside here. RSI also looks rather promising here. We are making some new relative highs over this previous mark back here, and it's looking like we are breaking above that 50 midline, which
yeah, I mean, I'm still bullish on this buy in this shorter term.
So the momentum is very
see any signs of reversal yet. Yesterday was a break of 400. Now we're trading over 400. So
you can see very clearly from
406 gap fill, I think, is
really steady
in our midst.
downtrend in this name. So perhaps the bulls are hoping
for
any sort of reversal.
We keep grinding up with it.
Ability for this name to hold now after recovering some.
It's gone this far. Why not keep going?
Appreciate all of the technical insight as always, Rick Ducat, our chart master. And Alex, when trading this name, it does look like from a technical front at least, and the RSI are showing that things are leaning more bullish.
Really should look for a dip buy on SPY today. Speaking of, I might get some right now. That engulfing candle there.
Which I can't believe we're already talking about, but it is pretty much April at this point. So walk us through an example trade, then leaning more bullish again.
Yeah, one other thing that really stuck out to me on this
Gulfing
chart was
candle,
how
then
tight,
some consolidation.
the price action really has been in a name like this.
I
We
like
talked
it.
about support levels at
shoot,
96,
okay.
possible
I was bought
resistance
nat
levels
gas.
at 97 and 98.
No.
That really illustrates
Never nat
the
gas,
other point
never
we're making.
again.
Low volatility, kind of a low beta, more defensive style trade, consumer staples, sort of going through all of this is highlighting that. And so you have to set potential
yeah, Mullins had
expectations
quite a rebound
future
here.
Volatility, future movement,
Look at it.
all with that in mind. And so I looked at a
13.5
strategy that would
today.
benefit from an upwards move, but it's not a tremendously large up move. And so
Yeah.
I looked at buying a call calendar above
Kind of a
the
little
market.
inverted head and shoulder
I just
there on the
happened to
hourly.
select the 100 strike, big round number.
Not liking the
just
daily
outside,
yet, though.
that resistance point that Rick had highlighted, but it's
MACD
got a little bit
did
of
cross,
time for
but
this to happen.
today's
And
candle's
so
red.
I looked at selling April's
Like to see it kind of
100
consolidate
call
up
to
here a
buy
little bit above
May
the
100
moving
call.
average.
So a little bit over a month and a half, let's call it, till
See if
that
this rally
May
will sustain.
expiration. And it's also just a $1 debit. So that means $100
Even
in
fill that
risk.
gap first.
And best case scenario is a move to $100. Both of those
You
fees
say
are
around
kind of
11 though,
in
that's a
your
good
mind,
point.
100,
Yeah.
100.
If it holds
And you can
11,
see
if it
also
fills
that
that gap,
while 100, the
not a
strike
bad spot.
and that price performance is the
shows some
apex
strength.
of this profitability
Oh, and
graph.
it's 5 flashing.
It doesn't necessarily have to perfectly go there. You can see those break-evens being estimated at those points.
Yeah,
but
Carvana's up
beyond that, I would just
10%.
say that it's more the area around
Been watching that one
100.
some.
So the closer it can get to 100, the better. But
GME just
the
nicely
likelihood of it
consolidating,
being profitable
consistent bounces.
increases if you just do see a little bit of an
Carvana.
upwards movement and trajectory
Hopefully got your
over
puts,
the next
Gene.
few weeks and kind of an inch towards
SPY
100.
is
Doesn't
moving
need to be a
down
fast
here.
move. In fact, it may even benefit from a slow grind towards 100 because it is that horizontal
It did go crazy
time
earlier.
spread in this
Both
particular
ways.
case. But Jenny, I think this is just one way to think about it. It's highly customizable, tons of strike selection. This is a bullish version of it. There's certainly bearish and neutral versions as well.
And we do have some duration here, as it does feel like May is creeping up rather quickly, but we are still, over a month out with this example trade. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignments. Now, coming up next, it's time for FOMO. We are talking all
Nice,
things
well done.
rocks. After an analyst feels even more bullish on this name, has been a steady outperformer throughout the year. We'll dive more into that analyst note coming up next.
Yeah, I mean, it had nice just red candles everywhere. It was pretty much first big green candle. Close. So realizing my natural gas loss definitely hurt my futures account. Should have just taken the short, maybe. Still could, it's just so low. The short looks right though, breaking this level. Here's the chart, the 1-year chart. I went from 6 grand up here to like 10 grand down there. Right here. Bought 600,000. I was broken up, I'd imagine. Oh, right here. Oh yeah, there goes 600,000 at 60.85. Big order. Google calls? Oh, SI might still be in this bull flag.
The shares at this point in time, and they really do believe that it's an attractive opportunity at this point for long-term capital appreciation in this company, and they do believe that they're going to be able to
use stop losses on your options
share, especially in the AI space, as they're using artificial intelligence to try to improve some of the software offerings that they have for their customers. We also have BTIG raising their price target to $16 from $12, and they keep their buy rating on the shares as well. So overall, just a really good report. Top and bottom line beat. Guidance was better than expected. You're starting to see analysts move their price targets to the upside. An 18% move. You want to be able to see if you can hold this type of level here. That would provide bulls some pretty good support here moving forward, especially as we kind of see a lot of this volatility work through the marketplace in the next month or two.
So, Kevin, I'm curious your thoughts on AI, because I briefly read over their earnings report and saw AI and figured that's part of the reason we're seeing such strength today. We saw the same thing with Micron. NVIDIA was another one. So is AI, in your opinion, do you think at any point overblown here? Because it does feel like if you're able to mention AI on your earnings call, you seem to be a winner.
Eyes moving down.
Yeah, I don't think it's really overblown. I think it's really the application on how businesses are going to be able to utilize or integrate it into their product offerings. I think that's the key area here. Everybody talks about ChatGPT, but at the end of the day, artificial intelligence has been around for a very long time. Natural language processing has been around a long time as well. It's just how do you implement it in a way that's going to be effective, and then also how is it going to be able to mitigate risk? I think that's one of the biggest areas that a lot of people are really not talking about at this point in time. Is yes, you could have a product, you can have artificial intelligence or machine learning improve your processes, but at the end of the day, we train that as humans. We train them, or we give that data to that AI program. So if something really fundamentally changes, how is the AI program going to be able to adjust or rapidly adjust to that? I think that's really some of the risk that is out there. But when we talk about Sprinkler, you can utilize artificial intelligence in order to maybe even listen into calls, or maybe even looking at sales projections or sales plans that are provided by their customers, and how can we actually improve that process. Artificial intelligence is great for that, but there's other applications that I find still going to be very difficult here, Jenny, especially when it comes to search engines. Are you going to be able to basically just eliminate search engines like Google or Yahoo because you're going to have one answer that's provided by an AI bot? That's something that could actually take a lot of market share away and a lot of revenue away from some of these bigger names that have been leaders in this space over 25, 30 years.
Right, and I mean, we joke that Google is now at this point a verb. Google is a term that we use so frequently. It's interesting to see how this space will transform, and it does feel like it's happening very quickly at this point. But we'll leave it there. Appreciate all that insight, Kevin Green, senior markets correspondent for the networks. Now, let's bring back in Alex to discuss our FOMO name today. That is Crocs, which is getting a nice lift on the back of some positive analyst news. B. Riley raising its price target with a buy rating. And Alex, this is a name we discussed, I believe it was the last time we discussed this, and I discussed about how you can eat Crocs, and I'm standing by that. We don't have Crocs to eat on air today, but I would eat a Croc if necessary.
Yeah, I'm not going to go there, but I will say, I mean, this has literally nothing to do with any other. It's such a unique company. It's so polarized. I'm just going to say it, actually. I want a pair of Crocs. I've never owned one. I want a pair, and that might be something I do after the show. I might just buy a pair of these things, but they're just so like weird, and they trend because of that, and they get these big celebrities involved, the Post Malones of the world, the Justin Biebers, that it's brought this hype, and they're almost like, we use this term, I think, too much, but there is a actual cult-like following for Crocs, and it is just this like subset of fashion that is so strange, but it's been nothing but successful for Crocs, and they've built on this. They've leaned into the weirdness, and it's worked really, really well.
You're right. I think what you're trying to say politely is they're ugly. These are objectively ugly shoes, but they do have that cult following. And I actually, with this point, I would pay money to see you wear Crocs, because I do think they're so funny looking, the colors they come in. So I will support your purchase of Crocs.
I don't know that they'll make it to work. They might just be, you know, for taking the dog outside, something like that.
That's fair. But to dive into this note today from B. Riley, that does feel pretty optimistically on Crocs. The analyst did say this polarizing and opinion-driven nature behind Crocs' core clog products has distracted many investors. So this analyst completely agrees with you, Alex, here. They do appreciate this company's business model, as well as its competitive advantages and importance of the footwear ecosystem, as well as its international growth potential. The firm now views the stock as a multi-year core holding that should deliver absolute and relative returns and 2023 and beyond. They also said the currently challenging retail environment could be a major opportunity for Crocs as consumers really continue to now find affordable luxuries. Now, shares have gained over 570% over the last 3 years, which is astounding. During that same period, earnings grew on average by about 73%. Shares are now about 13% this year, not necessarily seeing a huge surge, but up, I mean, 167% off their yearly low. So this name moves, Alex.
Yeah, and it's a stock that's basically gone 10x over the last 5 years, a little bit less than that after the pretty steep sell-off from its highs. But I think this analyst really gets to the crux of this entire thesis, which is, yeah, there's some weirdness to it. Some might call them ugly, some really like them. There is this polarized, there is opinions about these particular shoes. But we're not necessarily talking about the product. We're talking about the business, and the objective nature of that, as this analyst highlights, is
they execute
really, really well. They are growing, and they have competitive advantages because there's really nothing else like them that has any type of following. So they kind of operate in this space that's unique
in a traditional,
footwear, apparel type business. So that's really the importance. Like, I can have an opinion on them, you can have an opinion on them. Everyone at home can have an opinion on the actual product, but the objective fact is that they're doing well as a company, and then it's just coming down to evaluation, what you think that's worth, and if you want to bet on it. But I do feel the fear of missing out, given its run off the lows right now. Jenny is certainly feeling like this one's got some velocity to the upside.
I completely agree, and make no mistake, ugly isn't even necessarily an insult, because I do think that you have these really influential figures like a Justin Bieber putting these on, and all of a sudden it's fashion. So it's not necessarily even a bad thing. They're just such odd shoes, and it's such a odd really company. When you look at the rest of their products, there's like Crocs heels, which are also very, very interesting looking, but like you said today, leaning into the upside. We also are seeing a nice move today, and we're still down about 14% from yearly highs, so we're not necessarily at right now. It's
why is the
potential, at least based on
premium so high on Zim?
Walk us through what you're thinking for an example trade.
Yeah, kind of a goofy name, so I wanted to look at something that's a little
bit
less
didn't really
talked
play
about
out
in terms of a trade strategy to kind of match that. Looking at a skewed
is on the
call
scanner for some
butterfly, in which
reason.
we're buying a debit spread that is wider than the credit spread that we're selling, but they meet at the same short strike. So buying a $10 120, 130 call vertical in May,
while simultaneously selling
We're
the
looking
130,
at the
135
22 and a
call
half.
vertical. Doing the whole package for $3
Line volatility
creates
is
a
only
very,
71%.
very interesting
What is
risk
going on here?
profile with a break even pretty close to the current share price. So break even would be 123 in this particular trade illustration. The current share price is 122.5. So, you know, within a stone's throw, let's call it, from where we're currently trading. But I think the risk profile does a really good job of explaining what we're really hoping would happen with this type of a trade. A move right to 130 is the best case scenario. Why is that? Well, both sides of this trade, which have kind of counteracting forces, would go to their maximum possible value, and they work together at that one particular point. So you'd have the credit spread working towards a zero, kind of as it decayed toward expiration. Would
yeah, I heard you, Jay.
expire worthless.
Heard you on
at
your
the same
140.
Time,
she's
have
gone.
That debit spread working
like an
towards
hour
a max,
ago. Doesn't look like it wants 140 yet.
In which that $10 wide spread would work its way towards $10. So as those converge, you subtract out the $3 debit, it can net out to $700 as maximum possible profit. However,
GME back at that level.
Likelihood is not the highest of likelihood. Is it really just one exact spot on the chart? But if it were to rally through that and even go through 135,
getting
this thing
bad
just took
data or
off
something.
to the upside. The beauty in how this is set up is if all these options were in the money and they were offset through assignment and exercise,
right,
there would
22
still
and a
actually
half.
be a $200
saying this
profit
IB is
that could be made on this one. So it's a bullish strategy that doesn't have
248%.
upside risk theoretically, but does have a point around 130, at 130 exactly, in which that this has a best case scenario. So the idea behind it is risk defined. We know the risk going in. It's limited to the debit spent. Break even pretty close to where we're trading.
The bid price is right, but why is the IB
benefits
so
from an
far off?
upside move.
And looking to build on the fact that even over the last 12 months, shares are still up about 55%. So who would have thunk that Crocs would be one of these solid performers, especially throughout retail? But it seems like they have really been able to do something right. So for that, I applaud them, regardless of my feelings on the Crocs and the widgets and this whole entire space. But a really interesting name. We will leave it there for FOMO. Now, coming up next, we'll be looking at Roku. Shares are down over 4% today on their restructuring plan. We'll discuss that more with Renita Young coming up next.
Fill in this gap a little more. I forgot this put screener. It's giving me Zim for April 21. 22 and a half strike. Wait. Okay, April 21, 23. 22 and a half. So that's $2,250, right? Used. Oh, Jamie broke through the low. Broker for my members? I don't know. Need licensing and stuff for that, I would imagine. Might get puts on this thing, honestly. 2210 is kind of the last little bit there. Could be a false break. Or to SI might be doing. In like a money manager, not a broker. Yeah. Yeah, like a fund, setting up a fund. Maybe. Oh. Buy wicking out of there a bit. Puts her down with this move? Might be a little false break. We'll see. Seems like it's just moving with the SPY, but hoping this level is stronger than that. See this screener, look. Showing the Zim April 21 put. 22.5 strike put. Showing that has 248% IV. Showing the bid is right. Close to it. 475. But the IV is way off. Here's April. 2.5. Showing it's 79%. It's just an error? I don't know. Yeah, it depends on when you bought the puts, right? So bottom at a low and we had a bounce since then, it's back down. You're gonna be paying for that IV. There's SPY's coming down more. EVTL hanging out at the highs up here. Birds sitting around. HLBZ came down 3.5. I know, I can't believe how low the IV is. Aren't worth it? What do you mean? That's a good deal. Oh, to sell, or what do you mean? Well, you haven't really got a full break here. You know, GME's been flat since earnings, really. So if it starts to flush through, I mean, you're gonna get a move. But the little intraday moves and staying above that support, yeah, it's not gonna do anything except for burn theta. He's kind of bouncing there a bit. is this back again? I think they're building the road. This happened like a year and a half ago. They were doing construction on this apartment. It wasn't even that close, but they were just, it was up in the air. It's like a 10-story apartment or something. And they were just grinding all day long. It's a constant, like, I went over there. I literally went over, like, find exactly where it's coming from. This one guy, I think, just literally is grinding like a 50-foot thick rebar because he didn't even stop. It just is all day long just grinding. Around 6% in my puts. What's this out? You're gonna throw a rock at him. At least an owl makes sounds of nature and nice sounds. Is Kevin dead? Did you kill him? I bath at the lows. Just the dip buy on SPY. I close my shorts. I'm so flip-floppy. BY's got me messed up. Tomorrow's Friday. $36 special is greater than rock. Did you shoot with 36 special? Wait, 38 special you mean? The 36 special. No wonder he hasn't been responding. How could you have injured him with that and not killed him? That's one tough Kevin. He needs to bounce here. He needs it.
If you look at the analyst call today, Evercore ISI
BBBY guys are talking about
to an outperform from basically
see some people buying the dip.
$38 from $34. I think it's really based upon the aspects of Juniper now finding a very compelling market in companies like Verizon and Google. They actually secured a couple of large contracts amongst these mega cap giant, in this case, communication service providers. For Verizon, it's 5G, and of course we know Google, alongside Google Fiber now, has become a very large competitor to the traditional cable broadband network providers. So Juniper Network is again a supplier to the 5G as well as traditional broadband network suppliers, and they actually secure, like I said, these two large contracts, which I think is manifesting into some positive EBITDA growth as well as top line sales growth, considering they're growing about 3 times the sales of Cisco systems, but the stock has actually underperformed in the last year. And I think it has to do with the fact that this is a growth company versus Cisco systems, which is more in the value technology space. And we know the value technology names have actually done quite well in the last 6 to 9 months.
You know, George, I love that you bring that up because with that in mind, whenever I'm kind of reading through the analyst commentary and looking at what they're saying, of course, the reasons behind their decisions are really important. I encourage, of course, all the viewers to always look at that. But I always look at, what are they saying as well? And in this case, they're saying that we think the stock should go back to, and our price target is essentially 5-year highs. And in a market environment that has changed so dramatically over the last 5 years, I would say it's a pretty optimistic take on a firm to be saying, I think that they're going to get, basically from a valuation standpoint, be as worth as much as they have been at any point over the last 5 years, given all the things that have happened.
I think it's an interesting note too. I mean, you got to consider the dividend. The company's actually paying about 88 cents in dividends. So if you annualize that, let's just estimate now. Of course, they probably have increased their dividend. That's about $4 and about 80 cents a share in dividends over the last 5 years. So you look at the total return, it's probably better than, of course, where it was 5 years ago, including, of course, dividends that were paid out and moved off the balance sheet. But nonetheless, I think it's one of these players. It's actually been around since the dot-com era. It's survived the dot-com era. It has competed quite aggressively amongst larger mainstay competitors like Cisco Systems, Ciena, Aristanet. ANET is actually another great performer in the same sort of broadband network technology space. But I think this is an interesting situation where you have growth at a reasonable price. It's only trading around 1.8 times sales, where if you look at Cisco, it's trading around 3 times sales. So we may be seeing a little bit of a transition into the growth areas of the high-performance network gear suppliers like Juniper versus more the value-oriented ones like Cisco, because I think if you look at the growth rate of Juniper, it's growing about 2 to 3 times the rate of Cisco Systems, but it's been underperforming Cisco. So it might, again, play catch-up here, at least on a 1-year basis to that name. But nonetheless, it's actually trading quite well. If you look at it in the last 10 days or so, it's breaking out to some new highs, at least on a year-to-date basis.
Yeah, and George, I think that you make a really good point. It's that finding these growth versus value names within the tech space, because I look at this year-to-date chart and I was not fairly impressed. But then, like you said, we've seen a recent uptick, and building on some of that strength here, this analyst did say today that they do see this name as a beneficiary of when the macro environment continues to get choppy.
You shot to scare him, not to
then speak out of the other side here is, why haven't we seen this name at least over the longer term outperform? Because this is, to my knowledge, a maker of routers and different IT solutions. It's not necessarily in the next wave of tech, but why have we not seen that resiliency, at least over the last several months from Juniper?
People are buying this dip like crazy in BBY.
It comes down to scalability.
Like,
the gross margin profile of this business, around 54%, is about 600 basis points below that of Cisco, and I think that's one of the reasons why it's been underperforming. It just hasn't had historical net income margin profile, I guess, to me it seems like Cisco Systems, and so what you've actually seen is you've seen outperformance
made all their money shorting it,
valuation and profitability, and I think that's why we've seen Cisco Systems outperform Juniper. But nonetheless,
yeah, they basically were trashing the stock,
especially the challenging
shorting it, making money.
Bodes
That's why it's been dropping. And
for companies like Juniper,
BBY decided
just a moment ago, about 65% of their sales.
They've realized now maybe that's what's going on, and I don't know.
About
52% took so long, but
of sales
terminated that and then
offered
shares.
Concentrated by Cisco
I'm wondering if they're actually
overseas. So if we see
selling
some
them
challenging
today,
macro environments,
if that's what this actual
currency
drop
headwinds,
is.
I think that Juniper may end up on a relative basis outperform Cisco Systems because of their domestic exposure.
I mean, of course, they're not saying down 25% is good, other than it's cheaper for them to buy more. But yeah, I guess terminating the complex warrant and preferred share deal.
Appreciate all of your thoughts as always. George Till, senior markets correspondent for the network. That also does it for Alex and myself for this Thursday's Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
I don't know. Yeah, it seems like HBC just made their money. And I guess Bed Bath got to a point where they've realized what they're doing, or that it's not working. Terminated that, and now just are offering shares on their own. I don't know. TNA. So I guess they terminated the open market sale agreement with Jefferies. The company had sold approximately 22.2 million shares for approximately $115 million pursuant to the Jefferies sales agreement. So that one's canceled. They terminated the preferred stock warrants. Share this on Discord. Just kind of a TLDR on the filing. Nothing significant. Where's Dow? Foul. Buyback high and decides to delete. I know why they didn't offer shares when it ripped and squeezed. That just seems like sabotage from within. Seems like BCG. They had such a problem with that, but they're buying back shares? Like, what? The SPY is bouncing here. GME is right at this support level.
People are not loving it, and it's all because this stock, or the company rather, is trying to seek an offering of $300 million in stock. It looks like it can't sell it, or this is really after the company has already tried to raise funding more recently. Its CEO is saying that it did all these efforts to try to save the brand, including complete overhaul of the company. But the big question is, are these going to completely last? Is it going to be enough to get Bed Bath & Beyond down this deep hole of where it is? Additionally, the stock has already dropped below $1 a share. That is a very huge milestone in a bad way that we see coming from Bed Bath & Beyond. Also, it's recently tapped a former Walmart executive to head a lot of the business to help with that turnaround. So we'll find out just how much that helps, if at all.
Yeah, I mean, there was criticism from the early going when they were going to try and void bankruptcy, raise cash. It just has not received a lot of love because people just don't love it at this moment, as you noted, with this big down move. Another name here, we're turning this around and we're looking at an EV charging station operator. Tell us about that.
Yes, we're looking at EVGO. Those shares are rising today after seeing a big
much from retail
boost
to
from
save
its
themselves.
Maybe earnings coming in much better than expected. And the company was also able to narrow its losses in the latest quarter. Did still see a loss, but it was able to narrow. Also,
the old
something
AMC GME market
might not
cap
be the best.
swap
However, we can
theory.
see that folks may not be trading on that news. The company did
Their
issue
GME market caps
2023
are past
guidance
popcorn.
that was slightly short
Basket
of
dilution occurs,
expectations,
never
but it
fails.
looks looks like investors are
What do you mean
focusing
basket
in
dilution?
on that narrower
6.7 million on
loss,
GME.
the better than expected revenue, as well as some of those other metrics happening in a very different way, coming in more positively. You can see that revenue growth was booming. It was more than 280%
been over their market cap for a bit.
growth
Ever since that probably that earnings
the same
pump.
quarter in the year before. Really, really exciting for this stock and for the people who are investing in it. Interesting to see what more things come out, like analyst notes, if any of them will be raising the price targets as a result of this very positive fourth quarter earnings results.
Right. All right. Thank you for that, Renita Young. Appreciate it.
Thank you.
No, I know. What's basket dilution? What do you mean?
Move on here
AMC's going to offer shares. GME's going to offer shares. What does basket dilution mean?
President owner of Wright Financial Group, to talk about what investors should and should not be doing.
Yes, I know. Ape and AMC are combined.
Well, thanks for having me on, Nicole. I think investors should be wary. There's a Jekyll and Hyde situation going on, in my opinion. The Jekyll part of the situation is all the positivity we've had in this first quarter. Obviously, with GDP results coming in the fourth quarter, I think they were adjusted this morning to 2.6%. Inflation's dropping right from 9 to 6%. There's still some room to drop to where the Feds want it to go. Unemployment is still low. They're trying to raise unemployment, obviously, to bring down the demand. But I think investors right now need to really be anticipating the next two quarters, quarters 3 and 4, for more volatility in our markets and bracing for that.
Right, understood. And at this point now, when people say they think that, look, the VIX has pulled back, we're under 20 here, but retesting lows, volatility, the uncertainty makes it very hard for investors, right?
It really does. And when you look at the S&P 500, we're very range bound. We've been in the range of 3,900 to 4,200 points for a long, long time. We're not getting any traction there. And let's not forget, we have a debt ceiling conversation that's going to have to take place in July. I don't know if many lawmakers are really delving into that issue. But if you go back to 2011 and see some of the issues that were involved with regarding the downgrading of U.S. debt, the market losing, between 18 and 20%, those are issues that are real that people need to be thinking about. And the fact that the Feds, there's just been too much cash for too long, too many rate hikes in a row, 9 over the last 11 months. You can't have two major extremes like that of money infusion along with rate hikes and expect there not to be some delayed reaction. I know everybody wants this thing to turn around and be positive now, but I think there's going to be more pain in that.
Yeah. What do you make of what happened with the banks, the worries, the weakness, the potential for contagion? Do you think that crisis was averted, or are there some repercussions that are still looming?
They're just kicking the can down the road as far as I'm concerned, with the Feds stepping in and ensuring all those depositors. I want to make something clear, though. A lot of people talk about the bank contagion. And obviously, the banks are not in the same position they were in 2008 when, frankly, it was just bad debt, right? A lot of bad credit risk. Now you're looking at the situation where it's the Fed's causing the problem with all these rising interest rates. Jeffrey Gundlach was on a couple of days ago on one of the major networks talking about a lot of everyday depositors who look at their bank statements, they're checking their savings accounts and realizing, my gosh, I've been in here making maybe 0.2 of 20 basis points. I could be making 400 bips in treasuries. So I think you're going to see some stresses to banks later this year when more everyday Americans realize I should be pulling my money out of savings accounts, at least investing in 3-month, 1-year treasuries and doing a lot better than I could do at the bank.
Right, understood. With the Fed, you mentioned about the trajectory and the amount that they actually have raised rates. Someone who came on today said the Fed should stay the course, not have the tail wag the dog, and do the 25 basis points planned in May. I've had other guests who come on and say, stop now, it's enough, there's a lag effect. Where do you stand in this?
I think they should raise one more time. I think their next meeting, isn't it in May? I believe it's May. when they're going to raise another, probably they're going to raise another 25 bips. But, you know, again, it's too many rate hikes in the last 9 or 11 months, 9 times. I think that's at a point where they need to slow down, kind of let this thing filter through, because if they put too much stress on the banking system by, let's just saying they raise 50 basis points, that could really throw shock waves into the banking system, and that's the last thing that we need at this point in our financial institutions. We need to keep those strong and people believing that, you know, our deposits are protected. So I think they need to be very cautious moving forward. 25, and then let's hold for a while and see what happens with this contagion, you know, we've talked about.
Right, understood. I mean, with the value that we're seeing,
not slow for BBY. It's had a lot of excitement.
To be the go-to
very fast to the downside.
That, right? How long do you think that trade lasts?
You know, I think that trade lasts at least through the end of this year. And frankly, I know you've had a few guests on this week that think that through the end of the year, that might be the turnaround point. I think that the turnaround point could be later than that. I think that when you look at historical trends and getting through bear market cycles, the pain is going to last probably a little bit longer through the end of the year. So really, the strategy is to play the short-term game right now, get the extra interest that you can get on a risk-free basis, and have the generational opportunities that you're going to have down the road to get into some of these names after the recession is really, we're convinced we're at the bottom of this thing. And, you know, again, we've got some pain to happen because this first quarter was certainly, you know, a lot of good news and not as much bad news, with the exception of Silicon Valley, of course. So I think it's going to go a little bit longer. Everybody in our world seems to want to have everything happen quickly. And I think we have to be more patient with this. The pain may last a little bit longer. Not our fault, but the pain is going to last longer.
And if someone were to put some money to work, not in short-term treasuries, I mean, are there certain sectors that you seem to lean towards as maybe some good plays, either for the short-term or long-term?
Well, yeah, I mean, the way our practice runs, we separate our portfolios into 3 basic pots, right? The first pot is the immediate stuff they need. They can keep in treasuries or money markets. Those are doing well enough now. The second set, the money that's needed by investors for income reproduction, for you know, keeping their budgets intact with their Social Security. We're going to be using high-quality dividend stocks. Those played well for us last year. And so far this year, although our net return is down, the dividends have certainly aided in that. And the third thing, you know, just nibbling at some of the larger names in tech, of course, you have to look, obviously, at those companies that have large cash balance sheets. Companies like Alphabet, Google, Apple, those companies down the road are going to be golden because they're not going to need the government lending for them to operate. They're already, you know, behemoths. They should be able to take advantage of that situation. Down the road, those are going to be the opportunities that we'll be, you know, looking at for some of our clients. And there's other names too, and we can talk about that at some other point. But there'll be other names that people can invest in when the time is right. I don't think the time is right yet.
Right. David Wright, great to see you. Thank you very much.
Great to see you, Nicole.
Thanks, David. Wright Financial Group. David Wright, thank you. Coming up later this hour, I'm joined by Dolly Lens, Jenny Lens. They are taking a look at the impact of higher rates.
No bounce on this level on GME yet. Such a legit bounce
earlier.
earlier.
Season, hot or not?
With volume.
They'll know the answer. And we'll take a look at some of the top position stocks in the ESG space. Our panel top, Charles Schwab, stops by to give us a global what he's watching. All that coming up.
The World Bank has said that the global economic growth could average 2.2% for the next decade, the lowest in 30 years. U.S. considers asking Black Americans on census if they are slave descendants. Evercore founder Roger Altman says the odds of a recession are rising. Thirty-year fixed-rate mortgages 6.32% for March versus 6.42% last week. Economic uncertainty continues to bring mortgage rates down. Freddie Mac says. They also say low inventory remains a key challenge for prospective homebuyers. Tech layoffs in 2022 were the most since .com bust. Yikes. Bank of America says the S&P 500 has little room to move higher through year end, but predicts a 7% return for the index over the next decade. 7% in 10 years? I don't think that's worded right.
Let's get nuts!
What the heck? Thanks, reddish bluish red owl associated with Kevin. Owls rule. RIP Kevin. Thank you, man. I really appreciate it. My pleasure. Thank you for your support. Showing up. Thumbs up. Donations, of course. That is awesome. We'll put a prayer out for Kevin that he heals up quick. I think he's just wounded. Maybe just wounded. U.S. citizens residing or traveling in Russia should depart immediately. Bank of Canada official says quantitative tightening will likely end in late 2024, first half of 2025. Or like 3 weeks ago when banks started collapsing and it fully reversed. McCarthy says Republicans could act on their own debt ceiling if Biden doesn't negotiate. Jack Ma engineered Alibaba restructuring from overseas. Jack Ma switched travel plans to return to China over the weekend. Beijing conveyed messages to Jack Ma to return home and contribute to China's economy. U.S. says Russia is seeking to send delegation to North Korea offering food in exchange for weapons. What's going on? Netflix is working on expanding its games services to TVs and even plans to let you use your iPhone as a controller. What?
Jeffrey Kleintop, Chief Global Investment Strategist at
Your iPhone as a controller on Netflix?
Nice to see you, Jeffrey. So we're wrapping up this quarter, which it's been a great first quarter for the most part for stocks.
That's
I know we've had a lot of volatility and a lot of news. What are people saying in the takeaway as we're wrapping this up?
Wait, how would your iPhone
and globally?
Like your TV, like Bluetooth?
Well, it's an interesting end to the quarter.
Wi-Fi? Yeah, I guess over Wi-Fi I could do it.
Energy has led the overall market higher. That's the best performing sector. I know tech's doing well today, but it's really about energy, a broader rally in stocks that are sensitive to the pace of growth and inflation might be returning here at the end of the quarter as concerns of our financial crisis fade. We can see that in
Bed Bath is flattened at 60 cents.
Economic data surprises, dollar weakness, notably today.
We'll see which way it breaks, the upside or downside.
And early signs of cyclical leadership emerging. I think it's interesting because it points to a broader trend where
the illusion of war is the war is classified.
January was all about fears of recession, February about fears of overheating and inflation, March about the financial crisis. But through all that noise, every single month this year, international stocks have outperformed U.S. stocks. They're now set for an 8% first quarter gain, and that could continue in April. So I'm excited about what I'm seeing, given that we've been talking about being focused on international stocks for over a year now.
Yeah, and you've been talking about the outperformance of those international stocks, so you were right on point with that, and you think that that outperformance can continue into April. A lot of folks are really concerned about earnings season when it approaches, because they're feeling here at home that some of these earnings are still frothy. But if the outlook for international is the better play still, right? How are we looking abroad for earnings?
Yeah, I think you're right. So earnings growth in the first quarter expected to be up 6% from a year ago in Europe. That's for the stock 600 index versus down 5% in the US for the S&P 500 index. So that's a pretty big difference. Has to do somewhat with the sector differences there, but also what we're seeing in terms of better economic momentum through the first quarter in Europe. Europe was braced for a deepening recession on a lot of fears over an energy crisis, which just didn't materialize, and businesses and consumers have bounced back there. We're also seeing that European banks are not as exposed to the risks facing U.S. banks. They have more capital, they have hedged interest rate exposure, and they have less lending to commercial real estate. And I'd mentioned that valuations are still much lower, even after a year of outperformance. The forward PE ratio for the EFI index, international stocks, is just 12.6. That's below average, versus the S&P 500, still relatively expensive at 17.4.
Right. It's interesting how you say that the bank stress here at home seems more prevalent than it was in Europe, even though we had Credit Suisse and Deutsche Bank and some concerns abroad. But you feel like the bank stress overall is fading?
It looks that way. So, we can see that in a lot of technical indicators. If you want to look at repo rates or bank borrowing from the discount window or credit default swaps, but we can see it in practical signs as well, like the number of Google searches about FDIC insurance. That has returned to near normal levels. If you look at Google Trends and you take a look at it, that's a good sign that people are a lot less panicked about their deposits at banks and worried about their insurance options should their bank fail. And that's a sign here, along with deposit outflows easing. You can see in this chart here how those searches have really come down pretty sharply. I think that's an encouraging trend.
Right, understood. So at this point now, we're still waiting on the Fed to likely raise rates one more time. When you think about the consumer, which really drives GDP, at home and abroad, what is our takeaway there, and what should we be thinking in the big picture?
Well, I want to watch the consumer very closely. Obviously, concerns about financial contagion could shake up spending. But, when we take a look at daily or weekly readings of foot traffic in stores, it doesn't appear to have pulled back very much. I know it's very early to judge what the fallout from all of the banking stress may be as lending conditions continue to tighten. But there's usually a one-year lag associated with that, its impact on lending. Instead, consumers seem to be doing okay. I'd note the fact that the dip in interest rates has started to benefit housing. Remember, the home is probably most people's biggest asset and something they really think about as it relates to their personal financial security and their spending. We just got data today from Australia, in Sydney, the biggest city in Australia. Home prices rebounded for the first time in 13 months as interest rates have come down a little bit. Mortgage rates have come down. So that could be a plus here that we're not thinking about in all of this, that maybe the banking stress has caused those yields to pull back a little bit. That could actually bolster households' sense of their own wealth as it relates to housing. So that could actually encourage spending. We'll clearly need to be keeping a close eye on this data.
Right, understood. Jeffrey Kleintop, great to see you. Always love having you on the show.
Thanks, Nicole.
Thank you so
Thanks
much. Jeffrey Kleintop, Chief Global Investment Strategist of Charles Schwab. Thank you. Coming up next, we'll continue talking about home buyers, spring selling season. I'm joined by the pros, Dolly Lenz, Jenny Lenz, to discuss the latest developments in the real estate market and what you need to know for the spring selling season. Coming up next, we'll be right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our Active Trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I'm Nicole Petalides coming to you live from the New York Stock Exchange every single market day from the opening to closing bells. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Tomorrow, special guest right here on the watch list. NBA superstar Giannis Antetokounmpo will be right here on our set, joining me live here at the New York Stock Exchange to discuss his journey from Greece to NBA champion and MVP and his efforts to make a positive societal impact through philanthropy, a new ESG fund. He's working with Calamos. That is tomorrow, 2:20 p.m. right here on the watch list. Be sure to join us. And welcome back to the watch list. I'm Nicole Petalides, live here, and it's spring. It's not too warm out, but it's spring. Traditionally busy time for home sales. And let's get an expert look at the selling season for homes. And Dolly Lenz, CEO, Dolly Lenz Real Estate, and Jenny Lenz, Managing Director of Dolly Lenz Real Estate, both joining me now here on set. I'm so glad that you're here. We're talking about the National Association of Realtors February report. Had some surprises in it. What are some of the trends you've been seeing, Dolly?
Well, the trend was getting to be a little positive until this whole banking crisis, right? And even the numbers have a positive spin, right? The home sales were slightly better than expected, so everything was a little rosier than expected. However, the banking crisis does leave a lot of future in the wind because people won't be able to qualify for mortgages, right? If they tighten credit even further.
Which is something we're seeing.
Exactly.
Right?
So we used to give all our business to First Republic, right? Our banking business.
They gave great rates,
yes,
great service, and now obviously they're not going to be lending out a lot of money, given, like Dolly said, this credit tightening, which is pretty scary.
That's a great point, because that is something that people, you could say that mortgages came down a little bit and people were back in the market, but they're creeping back higher again, right?
Yeah, A, they're creeping back higher, and B, again, the credit looks like it's already tightening. You know, how much better than 800 can you have as a score? So I'm not even sure who's going to qualify for a mortgage.
Right, and Jay Powell himself has said that the credit crunch and what we've been seeing may in fact help with monetary policy. They won't have to raise as much because it will slow the economy, but really takes away the liquidity and opportunity to make those purchases. Jenny, when you're seeing these different areas, it's my understanding that there may be some more inventory, but the inventory is because it's on the market longer.
Right. There's really an imbalance between, there's no demand problem. That's the major headline. There's no demand. It's really the supply. There isn't enough supply for people to afford these homes. As you said, mortgage rates are still very high, even though they came down a little. There's a tightening credit crisis, right? I mean, I don't know what first-time home buyers are going to do. They're going to sit on the sidelines until, mortgage rates come down.
And there's a big mismatch between the supply and the demand, right? So we have great demand, but for first-time home buyers, for the uber wealthy, that whole middle market, there's no supply of inventory.
Right.
So there's a mismatch. And that's a problem as well. So you see inventory numbers, but they don't necessarily match what people want.
Also, because if you sell your home, you're probably not going to be able to buy something that's equivalent at this point, because people are having to drop home prices a little bit for sale, but still, you're not getting that much. And
we talk about golden handcuffs. We talk about golden handcuffs all the time. You can't really sell because it doesn't make sense. Once you buy the new home at the higher price, your taxes are likely to go up, and it makes sense to stay. So all those homes aren't coming on the market, which is further aggravating the supply problem.
Right. No, it makes sense, because you want to sell your home, and even though people are lowering the prices a little bit to get the things moving, they're still really high compared to
really high.
a few years ago, even, right?
And you're not getting any help on the rental side. Rents are at an all-time high. So really, what are you to do?
And here's the thing. I saw one report, more home sellers sitting out spring selling season, okay? So maybe some people will be on the sidelines, but there's a lot of people who were caught between a rock and a hard place last year, and they signed leases. I spoke to another person in housing who said, it's coming up. Everybody's leases are coming up. So they're either going to have to bite the bullet and get a house, maybe it's a smaller house, do something
further out,
or do this high rent.
Right. It's
Should
pretty
bought
crazy.
that
I mean, the median rent in Manhattan for one bedroom is $5,000 a month, and that really gets you.
Think about that. What do you have to earn?
No,
right?
they had
an
offering
before credit crunch. It's
filing, so
who earns that money?
they're saying they can offer shares at any time
In the meantime, tell me
up
about
to $300 million worth.
Themes that you've
So
been seeing. Have you been
it's
seeing
quite possible they actually did it today.
Miami is the single strongest housing market, continues to be in the country. The west coast of Florida, crazy. Prices are 150 to 200% higher than they were 3 years ago. Imagine the sticker shock if you didn't buy 3 years ago. You're really saying, wow, what should I do?
Right, and a lot of people got these COVID deals for rent, right? And they were just so happy. All my friends were texting me, oh my God, this is so cheap. And now it's coming due because they got 2-year rents, 3-year rents.
And now reality says
exactly. So.
Do you advise to some folks maybe to make that purchase
made
at whatever the mortgage rate
canceled
is,
their,
and then you could always
terminated their
refinance
warrant
at
and
some
preferred
point,
shares,
have
all
you
that's
ever seen
over.
that?
If you don't get on that
And they just
property
offered
ladder, you are
$300
likely
million
not
worth of
creating
shares.
wealth. You will never become wealthy, pretty much, if you do not buy a home. So you really have to, and prices are just going to go up.
Yeah,
there's no
inflation is ensuring prices go up.
Right.
So there's no question of that. It's just a question of buying right when you buy.
When does the pendulum swing back the other way? Because it wasn't long ago that we had the buying frenzy and people were outbidding each other and say, oh, I have cash and I'm willing to spend extra. When does the pendulum swing again? I mean, if you put it into perspective over the long term, have you seen these kinds of swings?
Well, the big fear is unemployment.
Right, job loss, recession. Right, that would be the worst thing to ever happen. Obviously, prices would come down, and you're not buying a home necessarily if you don't have a job. Right. And if prices come down, you'll be underwater on your mortgage, which would be a disaster. That is not happening right now. But that would be the worst thing that would,
would happen. That would change it.
Right. I mean, the labor market is pretty tight. It's pretty strong at this moment, and that's why the Fed says they can continue to raise rates.
But there are layoffs looming. There are layoffs looming. A lot of companies are announcing 10,000 here, 9,000. It's a slow death.
No, it's true. No, but it's true. And here's the other thing. People are getting severance packages, so they're not necessarily filing with the government.
Unemployment
so the government
insurance,
does not necessarily see.
That's a great point.
That
So the numbers are reflective. That makes sense.
That may be a lag effect
Depends
as
on
well.
what the game was for you
in
and what
tech,
your plan was and what you were expecting
that
out
has
of
been
it.
one area that's had massive layoffs.
Tech is a wreck, right?
Yeah.
Tech is a wreck both on the employment side and on the real estate side. The
BuzzFeed's
worst
holding up nice.
areas in the country are tech hubs.
Today.
Seattle, Palo Alto, San Francisco, those have double-digit price declines. Everywhere else in the country increases.
How about, let's go back to getting a mortgage, because you were making the point, a great credit score. You had a great bank that maybe might be a little tougher now. What do you recommend to folks? Is a jumbo mortgage comes in at a better rate, right? If you get a jumbo mortgage, you get a better rate. right?
Well, it depends. It really varies by bank. It really depends.
Right.
So you really have to shop, like everything.
You have to shop around, get that letter before you go in, right? Because you're really going to have to pounce on that home you want, given, you know, there are 5 buyers for every house.
Sure, I think you make a great point. I mean, so now for spring selling season, what is our takeaway or our headline? Because, you know, here it said more home sellers sitting out. The demand seems to be still alive.
Oh, demand is very much still alive.
What do you think we're going to be saying in the summer?
It's going to be volatile.
Yeah, it's going to continue to be volatile unless we're out of the woods, which I don't see happening, right? It's too soon. It's 3 months away.
How about the luxury homes, just quickly?
That's still doing well. The rich are richer than they've ever been. Right? I mean, they pumped all that money into the system, and guess who has the money?
And they're investing in real estate.
They are.
Right.
Multiple homes.
Well,
we're following them all around the country. We just came from Houston.
We came from Houston. We go all over the country. We go help them.
Sell or buy.
Sure. Well, I wish you continued success.
It's an awful short, too.
The $1 billion broker. You didn't get that name for nothing. I know you guys work so hard and travel all over the country. But you mentioned Houston, Austin, Texas. They said that properties are on for 37 more days. So, you know, we'll
but
see.
that's really
that's not that unreasonable.
No.
Right?
Yeah.
I mean, New York can have 600 days on the market.
Yeah,
you know.
and the rent is astronomical. You made a great point on that. Wonderful to see you.
So great. Thank you for having
us
us.
in person.
Thank
Dolly
you.
Lenz, Jenny Lenz from Dolly Lenz Real Estate. Thanks for being here. Still ahead in the second half of our show, we'll talk about the ESG space and some best positioned stocks you might want to invest in. As we head to break, take a look at winners and losers in the S&P 500.
Camera's body's in rough shape under an underpass. That's a pretty rough shape for an owl to be in. They don't usually hang out under underpasses. Realtors on the show, everything's fine. Pretty much. Oh, they said it like it was, though. That, you know, people losing jobs aren't buying houses. Did you guys see the John Wick yet? I almost took my wife the other night. Things like, what, 3 hours or something, though? I was like, whoa. Around the target. Good. Is it like the other ones pretty much? The villain? Well, that's good. Oh, you guys all saw it, huh? Look at you all moviegoers. You guys all invested in AMC too? There's the GME bounce we were waiting for. Nice take, Abby. Crypto's a little weird. I mean, it's got to be somewhat weird to just pack in one action scene after another and have it make sense. It's basically scripted like a video game. Like a campaign. So heavy. Paying for Adam's second yacht. I'm anticipating some kind of bounce here on Bed Bath by the end of the day, but possible it doesn't. Yes. Thing is, they went from like $1 billion in funding to 300 million, right? So not maybe gonna help as much as their other deal. 300 million, I don't know how long that that will last for them. I mean, yeah, it could be bullish news in the end if they survive. I think the news that they've completed the share offering could be bullish. That could be a bullish catalyst. That typically is. EVTL found support. There's a red candle on SPY. Yeah, EVTL's just consolidating pretty flat. You're wanting to get back in, aren't you? Yeah, I mean, it broke this resistance. That $2 resistance was a big break. There's really not another big one until up here. 280. We've got some psychological levels like 2.5. Why I haven't added to it, I don't know. It's had a pretty good 3-day rally though. Could see a little pullback still. Hasn't really tested the $2 support level yet. He did the same shoulder flip, grabbed the gun with the arm move last time. GME red candle there too. Not selling for shillings. I think you'll get a better exit than where it is now. In my plethora. Reverse split is a catalyst for it to rip. Earnings is another catalyst. Earnings is next month. Reverse split could be next week. Them announcing that they've completed the share offering could be a catalyst for a move. It's just how low is going to go before that happens. I don't know. It's through all supports at this point. It's just trading on even numbers. That's how you can tell. Like 60 cents or 65 cents. Now we're at 60 cents.
For TD Cowen Washington Research Group to talk about solar energy, U.S. policy. I'm excited to speak with you. It's not something we cover as closely, and I'd love to hear what the current policy is. What's the outlook?
Sure. Thanks for having us. Really appreciate it. As you mentioned, we're here in DC, so everything, everyday policy and politics. And we've been really doing a deeper drill in on what's happening in the solar space, right? So there's been a multi-decade trend here of the United States government trying to use tariffs and trade policy to really carve out a niche where solar operators can be effective, really right? They can have a business in this space that's highly capital intensive, and they can outperform and have some form of positive earnings. And that's been a real challenge, right? We've seen a lot of movement globally in the supply space, basically starting in China and then Taiwan and then shifting to Southeast Asia. And it's been a real challenge, right? In the past 2 years, though, this has begun to change from the policy side. You can look at the 2021 Weaker Forced Labor Prevention Act, which basically creates a sanction on any materials imported from Western China. Anywhere in your value chain, if you touch those regions, there's a rebuttable presumption that there is some form of human rights violation in your value chain. And then 2022, there's a massive piece of industrial policy through the Inflation Reduction Act. So a lot has changed very quickly. And the two key questions that we're always trying to answer here are, can this emerging framework prove effective in building a domestic manufacturing base for clean energy and solar in particular? And then will it prove resilient, right? These are large capital investments with the expectation that you're going to run that operation for 5 or 10 years. We're heading into a new election cycle in November of 2024. We have an election for not only Congress, but we may have a new president in 2025. So there's a lot of risk there, and we're always trying to unpack those equities.
Oscar, I mean, it looks nice, kind of a little cup and handle here on the hourly.
Spending on ESG and assets for investing, we're seeing that grow. I mean, it seems to be an asset class that
it's holding above that 9 moving average.
Some love it, some don't. But you have, Larry Fink and
flip
Brian
bearish,
Moynihan and some really
green over
influential
the
leaders
9.
that have been very big on ESG investing. You have a lot of companies that are trying to make
broke out of this
changes
resistance
for the
at
better.
$6 level, so
Do you still think ESG has its
7.5
spot?
probably.
Money will still
8.
flow to this group, because it's my understanding that in a few years it's going to be over $50 trillion going to ESG assets.
Yeah, it's a hard one to peg a number at. What is the actual asset class? Because you ask 10 different investors what ESG means, and you get
actually
10
this morning
radically different answers. We really approach ESG as an investment framework, right? It's not a final product. It's
once momentum changes,
a toolkit that
I'm
allows
just
an investor
too
to
confused
bring
by what's going
in
on with it at this
additional
point.
information outside of basically commodified data sets that any investor
still
has access
upside,
to.
but
And so how do you begin to consider things that have historically been
size
externalities? And
large.
that's obviously in the climate space, around carbon, around water,
and I mean,
and the
some of it
S
was on
pillar for
margin even,
social.
so
It's
I
really
can't
how do you
even,
understand the value of human capital management? If you're a
I would've been
corporate
getting
that's
liquidated
shifting away
anyways.
from building and doing things, and you're providing technology and
Which I'm
technology
surprised I
services
haven't. I've got
or
margin calls like
healthcare,
every night.
really your value is intrinsic at that point, right? It's the
And then the
people
next
you
day,
have. How do you recruit the right individuals? How do you retain them? How do you train them? And then on G and on governance. So if you approach it from a framework as opposed to a product, that's not really ever going to go away. The terms behind it and how it's considered in the marketplace may evolve, and we've seen that from large asset managers, how we've gone through this sort of progression of the space used to be really about binary exclusions. I'm not going to buy coal or oil or have exposure to some types of weapons, to what it's become
maybe
now. And
60
it's much
cents.
more
So
of
intraday we probably
thought-provoking
probably a bottom.
Way to bring in
about
and measure
to power
risks
hour.
and opportunities.
So it might get a little
and
bounce,
then over your investment horizon that
to
changes.
65
So
cents or something
where is this
before
space
close.
going? It seems to be getting much more commodified in certain directions.
Sure
like, are you looking for impact? Does your client want something outside of total return? It can be on the water side. It can be on information technology or on climate. Are you looking for total return, and this is a way to find additional risks, right, and mitigate them out of that process? Or are you looking for something else where maybe it's possibly identifying names that have historically been a laggard in the space, but then have room to improve? So that's the real story that's changing. In DC, it's also very politicized at the moment, right? We're seeing conversations that used to be on the legislative and policy side being brought into the investment space.
Might be bullish
that's a
that
really
they
interesting
terminated the
trend,
offer,
and potentially
the
disruptive for managers.
Preferred stock and warrants.
Just give us some names
maybe that's
to
a bullish
watch
thing.
that you follow closely. I believe your
I don't know enough
pick
about
in the
it
solar
to
space is First
really
Solar.
have much judgment.
This is a name that you
I do know
like.
share offering
Largest existing
is usually bad for
capacity
investors.
here in the U.S. Is that
course,
right?
they're
I mean, I
diluting.
want to hear some of the
Could be good
names
for the
that you
company
like
if they
that
need
we
money.
can follow closely.
The next thing is
So I
a
sit
share
in the
dilution
policy
at
group, and we don't
literally
do
all-time
specific
lows.
buy-sell hold
It's
recommendations.
definitely
I
not a
work
good
very
sign.
closely with my colleagues across the TD Cowen franchise, so we're always trying to connect the policy with what's happening in the real economy. So you mentioned First Solar. That's a name we highlighted in a recent report, just because it has this integrated value chain that has a domestic content exposure, right? It's in the space. So if you're a U.S. developer for renewables and you want to capture the new higher investment tax credit, you can receive an additional 10% boost if it has domestic content. And one way you do that would be head to a company like First Solar, which can basically show you that everything throughout its value chain, from the materials that go into the process, the thin film manufacturing, and the final module production, qualifies.
Yeah.
So that's a really interesting story with a lot of
Kind of
growth.
killed a
We've
lot
also
of
seen
the
a lot of
different
attraction to sort of the upstream and downstream elements on the PV side. So
around
that's the silicon and polysilicon
very
production and the
complex
module
offering
production.
they had.
That's where a lot of the investments
preferred
that
shares,
have been
the
stimulated
warrants,
by the
I
IRA
think that's
with
all
Inflation
gone now.
Reduction Act have
It's
been.
completely
There's
terminated,
also
so
a very, very large and
now it's
robust
just a standard
commercial
old
industrial side
penny
and
stock
residential
with
side or
300
residential
million they just
solar.
offered
So
it,
those are
and a
names we
reverse
discussed
split coming
briefly
up.
around
So
Enphase or SolarEdge
reverse
that
split I
have
think still could be a
deep
catalyst
mode
for
in
a
these
bit.
high performance panels, inverters, and increasingly in the energy
Who knows
storage
how high.
space, which really unlocks the value of that product for a homeowner.
All right, John Miller, thank you so much at TD Cowen Washington Research Group. Thank you. Covering this policy on ESG and also giving us a good look there at First Solar. Still ahead, our panel is ready to discuss the jobless claims report. In fact, it's still below 200,000, but it is inching higher. What do we need to know? We'll break it all down with our expert panel next. you wonder where those jobs are going to come from.
Yeah, I mean, I 100% agree with you. I'm an employer. You know, I've had the worst 18 months of hiring ever in my entire professional career. It's been very difficult.
Yeah.
And we actually work remotely several days a week. And still I have people saying, oh no, I'm with a big box right now and I'm 100% remote. And it's just like, we have team collaboration that actually has to happen together at least a couple times a week. And if that's a job killer, like what are the expectations post-corona are just somewhat outrageous to an employer. You know, you're just kind of like, wow. But they're getting it somewhere. And so exactly where the layoffs are coming from, I think it's, Nicole, I think it's big. It's financials, it's going to be tech. Of course, if we start to see the economy start to really fade, then we're going to get layoffs across the board. But for right now, I see financials, I see tech, and I see the Fortune 100s are really the ones.
That's exactly right, because we've seen that. Last year we saw so many tech companies laying off. We're still seeing it this year. In many cases, they overhired post-pandemic, trying to balance what it was that they needed, supply chain, labor. People are home. So, Daniel, when you take a look at the mix here going forward, what are you expecting for next Friday? It's such an important, but we're waiting on this PCE print tomorrow, too. I'd love if you want to chime in on that. But these two prints are really important.
I think they are because, you know, people really expected that the Fed would continue to raise rates at its last meeting because they had to show that they were still committed to the fight against inflation and that they could separate that from support for the banking system. Now they're in a situation where they could decide.
My April calls are down 50%.
Hold it for a while, as they've suggested earlier.
What the heck?
But the thing is that there are still some industries where they're desperate to hire. The leisure and hospitality industry is still short 300 to 400,000 workers, and manufacturing is starting to come back because a lot of the inventories that they built up last year when everybody was crazily spending on services are drawing down now, and we're getting to a more normal situation. In fact, some of the biggest hiring numbers that we've seen, especially in metro areas that received a lot of migration, are now on the logistics and manufacturing side.
Yeah, and you know, the work from home, you were talking about people coming into the office, and the work from home group, it seems that, it's my understanding, there are fewer jobs. I saw one report saying there are fewer jobs now that are offering just work from home. I mean, you might get a hybrid model. Are you seeing that too?
I mean, that's 100% what we have found is the right fit for our firm. We want people to have the flexibility that is not like I'm tethered to an office 5 days a week, but we still have to have that collaboration and team in office. It just is not replicatable on Zoom as much as we try, and we can do it for a while, like through a pandemic, and we can do it through extenuating circumstances, but the collaboration, being in with somebody and just brainstorming and an idea, it's just as if you feed off of each other. So yeah, I think that the work from home 100% completely has got to die, at least from an employer's perspective, and I think the employees need to be accepting of the hybrid model.
Right, and the truth is, you mentioned, you know, some of these sectors where we are seeing some layoffs, but we've seen a lot of demands of get back to work.
Yes.
That's definitely here in New York City.
Yes.
For banks, for real estate. I mean, those are two areas that are really super ultra focused on getting people back in for that reason alone, just trying to shape the future talent too. You can't really do that if they're home in the same way. That being said, let's talk about some of the things within the print. Dan, when you look at labor force participation rate, wage growth, we mentioned the inflationary environment, but that seems to be improving, right?
You know, if you look at the labor market right now, it looks very similar to the way it looked before the pandemic. Low unemployment rate, high share of the population being employed, labor force participation rate is almost the same, not a really significant difference. And at that time, we didn't have a lot of inflation. We were still building productivity enough in the economy that we could have a fast-growing economy with a hot labor market and low inflation. And now the question is, are the sources of inflation really related to the labor market? It seems like they may be related to forces that the Fed can't easily control.
And in the meantime, Rebecca, you're trying to, you know, run a wealth management company. It's very hard to pick and choose with an economy that is back and forth, a Fed that may be back and forth. How's business? I mean, how are you running the business these days?
I think for us, we're a disruptor. You know, I listened to Kathy Wood talk about, you know, her funds are disruption technologies that long hold to disruption. We're a disruptor in the sense that I've seen with my global analysis the really challenge the U.S. dollar and this new sort of consortium of countries moving away from the United States, Canada, or Europe,
Japan, Australia, and
I mean,
New
the business
Zealand.
channel,
You know, those
companies themselves are
ones
also
that
trying
are
to
the
get people back
swift
in the office.
controllers,
So.
I'd say. Europe, obviously,
Yeah,
too. We are getting this consortium of
Are they
countries
pushing
moving
for people to
towards
go
the
back to
BRICS
offices?
nations, moving towards digital yuan,
Media?
in-bridge types of things, and that is scary, and it means portfolio changes, Nicole, that we really have to,
I don't think they have
really
any
work
skin in
through.
the game,
And so I think for
any
us,
motive.
we're doing really well because our message, I basically told clients in November of 2021 that we saw pullbacks coming and that was going to be it. And so we protected them and made the right calls. So for us, we're doing really well.
I'm glad to see you both. Thank you both for being here with me today.
Bearish
Talking
at that
jobs
point.
and more. Dr. Daniel Altman and Rebecca Walser. Thank you.
That more real estate?
That's going to do it for us here on the
Already
Watch
bearish
List.
on
I'm
real
Nicole
estate.
Petalides. I will see you tomorrow. Don't forget
Come to work from home.
2:20.
That's awesome.
Giannis Antetokounmpo. Market on Close is next.
Now look, you're able to sit on my stream all day. Just kidding, you were totally doing that at the office too. That'll be the major pullback in what? Pick up money for Market Watch, all bikini models. Break 22. Should. Still in this range, still in this channel. Used to bouncing the level. Maybe tomorrow will be bullish. Come on, power hour. It's on. I did basically nothing today. It was all pre-market moves again. This was the dip buy. Wasn't a great sign though. RSI divergence wasn't great. Really just had this candle of the break, which I don't know. But this buy would maybe last until tomorrow because we might get another gap up. The way we've been gapping. The way how everything seems bullish still. Over that 400 level. BBY to 0? Or you mean BBY? Best Buy. I don't think Best Buy is going to 0. BBBY, maybe. DXD. That's a pretty large dividend. What's that yield? That seems sketchy. Oil and gas company. Maybe. Be good. I think oil and gas is definitely need to come down. So I'd probably wait. Looking for long-term stuff. Box D, 45% this thing. Not Best Buy. Okay. Oh, just make a little list? Yeah. GME is trying. Inching back up to VWAP. All I care about is this bounce here. That's what matters to me. SPY double topping a little bit here. Like LevSec. You're actually going to jump into a LevSec though.
Let's start by talking some banks. That's where the weakness is this afternoon. Renita Young and Kevin Hanks are with me. Let's talk about regulation, because the conversation seems to be shifting here a little bit, Renita. There's not, as far as I can tell, any major concern about deposits, people running out of these banks, no real quantitative developments here. But from a regulatory standpoint, maybe there is something new coming down the pike.
You're absolutely right. So Treasury Secretary Janet Yellen, she's speaking at an economic policy conference today, and in her prepared remarks, she's going to talk about the need for not just tighter regulation, but she says that the fact that these banking failures have happened over the past couple of weeks, that means that the tighter rules that people were trying to institute after the last couple of recessions, they haven't even been completed yet. And so she says it's time to go back and finish the job. She says that 3 main things are needed. Finalize those post-crisis reforms. Consider whether or not deregulation may have gone too far. And also, she says to repair those cracks in the regulatory system that have appeared now that those recent banks have failed. And now what are regulators doing? So far, the DOJ and the SEC have launched their own investigations, right? And the Wall Street Journal was reporting that the Fed is reconsidering several of its rules specifically for smaller banks with assets between $100 billion and $250 billion. Now, how could that impact these banks? Now, smaller banks, when they get tighter regulations, many times it translates into slower earnings growth. I think
we're going to see the dollar actually come down with the market crash.
Enforcing those stronger regulations, it could restore confidence in the banking system, not just the regional banking system, but on a whole. And it could do that at a highly uncertain time when people are already on the fence about regional banks flying more to the banks that are too big to fail. So that's what Janet Yellen is talking about, and that's what the regulatory scrutiny is about. She's also saying that there should be tighter regulations on or oversight over cryptocurrencies.
I mean, it's not like a better or
money
worse.
Market accounts. She just went for it.
By further the money, you're going to have less probability.
Threw the kitchen sink in there.
She did.
Okay.
Profitability.
We got Kevin on the line here with us this afternoon. I mean, Kevin, it kind of does seem like this is the inevitable outcome here. We've been speculating about this for a couple of weeks because a lot of the folks that were saying, okay, go in, buy the dip in banks, even if the stress from the unrealized losses maybe is not going to be the story for the banks that remain. The fact that a lot of that money is flowing up and getting concentrated now probably would imply there's more regulation coming down the pipe.
Other currencies.
Like this is kind of predictable
Brazil
to some extent, but China doesn't like it anyway.
Oh, look at that flush.
Well, the political answer to any crisis,
yes,
Oliver, as you know, oftentimes is more regulation.
Double top.
You know, Oliver, it's interesting. From a trader's perspective, if you look at the risks that SVB
Brazil and China,
had, you have
they're
Nick
just doing trades
Theodorakis
in
on your
their
show
currencies now.
often, right? He's in charge of he's a managing director in risk at TD Ameritrade, now Charles Schwab. There's a risk department.
One of those, that's
most
true.
Traders,
that's
most
true.
investors, most retail traders, they have a risk department that manages and judges and assists you in your risk. No one seems to have done that. So the answer, the politician answer to this is more just basic regulation. Instead of, they should have been monitoring the risk of these banks, Oliver. And that's where I think the disconnect comes in. More regulation. Remember, there's an old rule in trading, Oliver. You put up a rule, I'll figure out a way to get around it, right? That's trading, that's business, that's a lot of things. So more regulation won't necessarily do it.
Double top.
Understanding the risk that these banks had, that's the key to what happened, because their risk should have stuck out in the risk parameters of banks. It was more than double what other banks have, and in terms of investments and assets invested.
Video?
You know, the fact that they're blaming this on the Trump administration and other things, it really doesn't sound like they're doing the hard work when they should be working on methods to manage the risk of these banks, Oliver. And one last thing, while we're looking, concerning to me in this market today is the weakness in the Russell and in the small banks.
Still bouncing on that level.
It was the Russell that broke early, and then the news on banking came out, Oliver. So if you're a trader and lately you have one eye on the Russell, the weakness in the Russell, and in particular the weakness in the regional banks and financials in the Russell, should have everyone's attention, Oliver.
Yeah, for sure. Scott, ours right now, regionals right now down 2%. To the lows of the week, so we're basically back down there. On the flip side, still most sectors are higher. I mentioned Intel's working. There is like this big, optimistic flush of money into the tech side of the market that like isn't stopping, Grenita, and on the verge of like breakout levels, I think.
It's not. And guess what
This
this
would
one
be a
had
pretty
something
weak
to do
close
with?
if BBY did not get a bounce here.
A little AI.
Yeah,
So
always.
Intel had its data center and AI event yesterday, and it
could
revealed
be
that some of
cents
its
tomorrow.
chips and other products will be coming to market sooner
Or
than people
55 cents at
expected.
least.
And investors are pretty happy about that. Intel also gave other positive updates on its entire data center system there. And that's what it's trying to build here. Intel wants to build an entire data center
good.
ecosystem
Climb back up to
within
VWAP,
this
now it's
one
hanging out.
company
It's fine.
and try to resemble what really many of these companies on the screen right now do collectively. And so the analyst over at Raymond James raised his price target on Intel to $35 a share from $33. That's around a 9% move to the upside of where it's trading now. And he also kept the outperform rating still incredibly bullish. He said that at the event, he walked away a lot more optimistic about the company's data center roadmap, even as they expect server share losses to continue through the year. So this is more of a longer term thing that he's saying. And then on the other end, we saw Wells Fargo raise its price target on AMD to $120 from $85, keeping an overweight rating on that. Yeah, right. That's about a 23% move to the upside. And Wells Fargo is expecting some near-term choppiness, but the company notes that the firm is increasing its year-out estimates to reflect a greater appreciation for AMD's broadening data center team. Again, it's the data center that on both stocks are really starting to get people more interested, and you can see fueling the buying as well.
All right. Kev, do you believe that this
could be
tech
setting up an RSI divergence
is
here.
Fundamental product
See how
and
tomorrow
service-based, as these
GME's
analysts are
popping.
arguing, or is it all just a giant Fed trade that could unwind quickly if the expectations of cuts is wrong?
Well, certainly when you look at high-cap tech, Oliver, you can make the correlation between lower interest rates and higher prices in them. But I think Micron's earnings earlier in the week really put a bid in some of the semiconductor names, some of the tech names, because of Micron seemed, even though their numbers were worse than expected in earnings per share and revenue, they did sound like, or they gave the impression that the worst was behind them, and the inventory problems in some of these semiconductor names was starting to dissipate and lessen, Oliver. And I think that put a little bit of strength into some of these names, backed up by Intel, like Renita just mentioned, Intel's Investor Day, where they had a pretty positive tone during that day. I think that's put a little favorable bid in some of these Intels and got the attention of some analysts that are starting to up their exposure and up their opinions on the whole tech sector. So I think that combination of Intel's day, Investor Day and Micron's earnings, Oliver, are helping to fuel some of this. But you cannot deny the correlation between lower interest rates and high-cap tech, Oliver.
All right, well said. Micron earnings, kind of a sleeper event this week in a way that really helped propel things. Appreciate it, guys. Renita Young, Kevin Hanks, nice work. Let's continue the conversation with Iman Bravanloo joining us, the head of income equities at TCW. Iman, welcome to the show. Thanks for being here.
Thank you very much for having me, Oliver.
So I want to start on that subject we're discussing. How much do you think this kind of almost a technical breakout here, if you're a technical guy in tech and chip makers, is this the market realizing that there is this untapped potential in their products, or is this a big levered bet again on what the Fed is going to do?
Okay, SPY's coming down here a little bit.
I think it's going to be a big levered bet on what the Fed is going to do.
GME's inversing.
There is probably a lot of excitement that
No
the
love sack
pivot
for
is
you.
in sight. And I'm worried that it's actually going to be misplaced. And I think that the Fed is going to have to thread a needle here, and it's a very difficult ask for them to do. So I will take the under.
Barkin said he's undecided what they should do at the next meeting. The most recent hawkish Fed member, Kashkari, Still seems like he's ready to tighten still, but is kind of wavering a little bit in his tone too. It's kind of odd to me, considering at the minutes we saw there was unanimity in the decision. So what's the view right now on what they're watching and what's going to either tip this scale one direction or the other?
Birds just flat.
Yeah, I think they're likely watching the same things we're watching. Their inflation was hot because they stayed too loose for too long and they were behind the curve all along. And so, they had to fight that. And for a while, they made it very clear that they were going to do that until something breaks. And sure enough, they broke something in the process of tightening as quickly as they did, really with an unprecedented pace and to an unprecedented extent, right?
All
and
right.
so
Would you get shares?
now we have to sit here and watch the fallout from what they did, and it's unclear.
Might not stay above E1,
the
as long as it holds the
amounts to which
support.
the tightening is going to be done for them from here on out. Obviously, banks are now going to cut back on lending. That's going to result in further tightening. And I think we're kind of teetering here between either a scenario where what they've already done and the damage that they've already caused is too high and is going to tilt us into a recession, or that this episode proves somewhat contained with the banks and the regionals kind of failing, many of them, and that they will need to do more in order to rein in inflation. But in any case, I think the scenario of a benign or soft landing, if you will, is just increasingly unlikely. And so really this is the time where, you want to, in our opinion, you want to stay defensive. You want to focus on those high quality companies, those dividend yielders, those companies that can navigate through the storm here, ideally unscathed, irrespective of whether it's an inflationary scenario or a recessionary scenario.
It's interesting to hear you describe the odds of a soft or smooth landing going down, but then I also see in your notes that you're looking at some of these battered sectors with a little bit of hope that there's some buying opportunity here, namely REITs. I mean, I know you're an income equities guy, so naturally you're going to be spending a lot of time in the REIT world, but there's a lot of fear in this sector right now that there's a major shoe to drop, specifically in commercial real estate and office space, places like New York that I'm looking at today. New York from Bloomberg today. That office vacancy is at a record in Manhattan.
I don't like it.
Yeah, so office is actually one of those areas that we'd be very, very careful with.
Okay.
But, our and I'll expand on that in a minute if you wish. But our viewpoint is anytime that you have the type of indiscriminate selling that we witnessed in the REIT space, really over the past year or 6 months. I mean, the space is down 20% over the last 12 months and is down year to date at a time when the broader markets have rallied. So this type of indiscriminate selling to us, typically results in pockets of opportunity. Now, I have to be careful and say pockets because it's not a widespread opportunity. But what we like are those high quality, dividend payers where you can get comfortable, through fundamental research and the heavy lifting of financial analysis, that these stocks are going to emerge on the other side, that their dividend yields are sustainable. And so, you have to do the work. You have to look at the balance sheet, assess the quality of the assets, mark the assets to market and make sure they're not already insolvent. Check the leverage, are there kind of lump sum debt maturity walls that are coming due near term? If there is old debt to be rolled over, is it going to be refinanced at a reasonable rate? Certainly the rate is going to be higher, but how much will that erode into the company's profits? And are they going to be able to sustain, cash flows and operations and dividends going forward? And then ultimately, of course, what you really want is you want high quality management teams that have a track record of navigating these cycles and coming through the other side unscathed. So those situations we think present themselves.
If it breaks that support,
areas within REITs that we like.
Probably 1940 would be my next
not in general. Office
target
is
took
not
for a
one
bounce.
Got it. Okay. Towers.
And then after that,
you
gap
like
fill.
like CCI,
1940 is a
AMT
pretty
type
solid
stuff?
support.
Yeah, so we very much like towers. There is a long-term
a break of
secular
this,
growth
probably
story in
buy some
play
puts.
there.
So far, we've been buying calls,
all of
though,
your viewers
on
know
the
the
supports.
proliferation of iPhones and handheld devices and the increased data consumption. Everybody's kind of consuming video on demand. You know, all of that stuff really is ultimately made feasible by occupancy in towers. And so, you know, we think that that type of demand visibility in the REIT space is really unmatched. You know, we like visibility of demand, we like pricing power, which we think towers offer.
Okay. Good convo, Amon. Thanks for the specifics here and some good stuff for us to think about as far as income goes and what to avoid and where to be.
Should be out in like 30 minutes. Look over the plays I made today.
You got it.
Did add to stuff.
Iman Bravenlu,
Closed quite a bit of stuff.
At TCW.
Closed a ton of BBBY. We'll go through that. Thank you guys for the thumbs up. We got 62 likes. Well done. Thanks for your subscriptions. Make sure you subscribe. Hit the notification bell. Up, like, up, comment down. Happy money sticks around.
As Alphabet's had a bit of a sluggish day here.
Bullish Al, thanks for donating. Appreciate it. Ace Ventura. Much appreciated.
Picking up some
always so generous.
With Microsoft. We'll talk about that next.
Tree to Leaf, thanks for your dono. And for losing the bet. That is always nice. Only if you donate after. Otherwise, I don't want you to lose bets. I don't want that. Yeah, thank you guys. Appreciate the support. Another day. GME's still looking strong. We'll go over the T on the video though. Thanks Steve Aside, thanks Blue Owl. Thanks Dennis, thanks Ace, thanks Dink. Yeah, we'll see you on the premiere. Be like 30 minutes or so. Thanks, guys. Out.